Hello, everyone. Today we are discussing risk management. The topic is we're going to cover lots of things and build your base on how what are the responsibilities of a bank is in order to manage the money laundering risk and how theoretically it is managed around the world in banks. Let's start. We have a bank. Let's say, so a bank have different departments, divisions, but these days we call them to be groups. So a bank is divided into different groups. We're not saying group of companies, we're saying departments are now called groups. So a bank have information technology, IT group, that used to be called IT department. A bank have human resource group, HRG, used to be called human resource department. You have finance group and so on. One of them group is called compliance and control group, like compliance department. So we now call it to be the group. So a group is further divided into divisions. Okay, so compliance and control group, like compliance department, if you are still unable to understand what is a group means, just continue with the word department. But eventually you have to get used to this terminology. So compliance and control group is further bifurcated, further divided into different divisions. It has one of the divisions are called anti-money laundering division. In some countries, some banks use the word anti-financial compliance, or they use the word financial crime compliance, FCC. Whatever the name is, it is referring to a division which is responsible to manage the risk of money laundering and terrorist financing in a bank. So anti-money laundering division, we have certification for that, CAMS, CFCS, ICA diploma, and so on. And then you have anti-fraud division, which is which you have a certification for the CFE, Certified Fraud Examiner, those people who review the fraudulent activities of a banking product and services. You have a division called regulatory compliance, regulatory division. Their responsibility is to do regulatory reporting. And these are three main divisions of a compliance group. If you have added control there, then it means it's called internal control. And internal control means your quality assurance or quality control teams. So this is, those who are joining in, kindly don't bother sharing your audio, please. Not interested in listening whatever you're doing. If you need to control your audio or your thumbs, if you're unintentionally clicking something or touching something on your screen which is sharing your audio, please make sure of that. I'm going to remove you if you're not bothered to change your audio to mute it. Okay, so quick recap. A bank have different groups, IT, human resource, or whichever. One of we are discussing compliance because you are doing compliance related certification. They have lots of certifications. In compliance, regulatory body, regulatory reporting or regulatory compliance have their own certification. That's called CRCM. For anti-fraud have their own. There are plenty of certification on AML as well. So I've mentioned the one that you're mostly probably doing. If you're not, then if you're doing something, some other certification, this course that or the training session that you're receiving, it covers curriculum of all the certifications, other than the specific certification like CGSS, sanctions related certification, or advanced certification in AML for risk management or audit or something. That's they do not cover that. Other than that, the general AML certification, IC or CFCS or CAM certifications, their curriculum are covered in these training sessions. Okay, so group is divided into divisions. Divisions are divided or bifurcated in different units. So since you are doing anti-money laundering, We're not going to cover anti-fraud or regulatory or internal control. We're only going to cover anti-money laundering. So anti-money laundering division, it's further divided into units that are called transaction monitoring unit, not transaction monitoring system. Transaction monitoring system means automated tool. Transaction monitoring unit, we have then sanction screening unit, sanctions screening unit. You have next is PEP screening unit, or PEP or CFT screening unit. You're going to discuss next week what is a politically exposed person mean. You have next is trade-based money laundering unit, and you have AML review unit. You have negative media unit or adverse media unit or bad press. And sometimes some banks have started using CDD unit part of their compliance. CDD unit performs the updation of the profiles of the customer, simplified CDD or enhanced due diligence. Okay. These are the ones from here to here. These are part of your AML division, these units. Every unit have their own unit head leading the department. That unit head is then reporting to chief compliance officer reporting to the board of directors. So those working in these different units, they're called AML analyst. The sanctions ones, they have their own thing. So sanctions ones are called sanctions officer or sanction screening officers. Other than that, all of these are called AML analysts if you're working there. Then if you're working in CDD, that's your CDD analyst. If you're working KYC analyst. Majority of your headcounts in an AML division is right here in transaction monitoring. Like let's say 45% of the headcount is with the transaction monitoring, 35% is, let's suppose, in sanction screening. That's your 80%, and then you are going to divide your 5% with other different units. That's your 100%. So you want the most technical job that is being done in anti-money laundering is being done in transaction monitoring, and then things are a bit easier in different units. The one that you want to make a career, ideally speaking, you want to make a career in trade-based money laundering. This is where you're going to make a long-term career. Your job won't be easily replaced by a software or a tool. In future, we're going to discuss about the trade-based money laundering when we are discussing sanctions in 26th of November. Okay, these are different units in a bank. Now you came to know a bank is divided into different groups, and each group have their own senior management. Like compliance group have their senior management who's approving the request to open an account for high-risk customers. Okay, so let's discuss hierarchy. Before we do, I'm gonna clean up some space. Okay, put this in here. We're gonna get this this spreadsheet today to make your notes if you want to in WhatsApp group. Okay, so hierarchy. We're discussing what is organogram of a bank looks like. Starts with president of a bank, not president of a US president or president of we're not talking about presidential government or something, federal government. We're not talking about that. We're talking about president of a bank or CEO of a bank. Yeah, and then you have board of directors. We're going to discuss their responsibilities, and then we're going to discuss their designation and so on. Yeah. So president or CEO of a bank is a contractual job, it's a symbolic job. So we're going to skip that one. We want to discuss the one where this person is not an owner of the bank. Generally speaking, this person is appointed by the owners that are your board of directors or your shareholders. So we want to discuss the owners and their different employees of the bank who are responsible for their risk management of the bank. I'm not going to discuss the president. President is, if you want to know what's the president responsibility, president, there's a thing called in your bank there are different documents in a bank. Some documents are policy document and some documents are procedural document. Procedural document is the one that is signed by your president, approved by the approved by the senior management, but signed by the president. Senior management who approves the policy, both the signature and the approval is from board of directors for the policy document. So, but the procedural documents are approved by the senior management, but they ultimately are signed by the president. Okay, so what's the responsibility of board of directors? Board of directors are responsible for, we just discussed, they are responsible for approval of AML policy. They are also ultimately responsible for AML in the bank. Who's going to be held responsible if a bank is being used by money launderers or terrorist financiers? The board of directors. That's the definition of ultimate responsibility. So the owners or the executive directors, they are responsible because they are the ones issuing the policy regarding anti-money laundering, how good your bank's policies should be, a AML program should be, how effective it should be in managing the risk of the money laundering and terrorist financing in a bank. So they are the ones ultimately responsible for this thing in a bank. They will be held responsible in future if your bank is found to be being safe harboring money launderers or terrorist financiers. Okay, next one. Board of directors are also responsible for establishing culture of compliance. So what is culture of compliance? Culture of compliance means that how much efforts or how seriously you in your bank is taking the compliance responsibility. So what is compliance? Compliance means that when you are complying with the rules and regulations that are applicable to your bank. We mentioned that somewhere in the training session yesterday. I'm not seeing it, so I'm just going to write it again to save time. So the word compliance means you are when in your bank you are complying with applicable rules and regulations. No, not just anti-money laundering rules and regulations, and laws. So applicable ones which are applicable to your bank. So creating a culture means that everyone is responsible for that. Not just board of directors are serious about making sure that the bank is complying with the rules and regulations and the laws that are applicable. No, the board of directors are not just responsible for that. They're going to create a culture where everyone is responsible for that. So who are everyone else? So board of directors have created different hierarchies in a bank or approve an organogram for the bank. The highest position is your senior executive vice president. Then you have executive vice president. These two ones are called your senior management. When you reach this level, senior executive or executive vice president, you are part of senior management in a financial institution. Then they have senior vice president, or assistant vice president. These are, or sometimes they have functional vice president and assistant vice president, something like that. They made something up between vice president and assistant vice president. So we're going to skip that. We're just going to keep it simple. Vice president, assistant vice president, and senior vice president. These are two of them in the definition of management. Management, banks management. They are the one managing. They are your managerial roles. Those managers are team leaders. Okay. Then you have your associate level position. These are people who are starting their career straight out of college or their first job in bank, and they have to work, from very entry level position, work for few years to then reach the level of AVP and then to VP and so on. This is, you are in your early 20s when you start this career, and this is when you are in your late 50s when you reach this level. We're not discussing when someone suddenly in their 20s become senior executive vice president of a startup. Startup is, startup is a startup. Like any Tom, Dick, and Harry can become a VP there, SVP there, and so on. We're discussing a bank, financial institution, which is a 150 years old industry. So things are much more mature there, and it takes time for you to reach that level, and takes years for you to reach the level. You most probably in your late 50s, just a few years left for you to retire. Then you most probably become a senior executive vice president to deal with the matters related to the matters that our senior management are supposed to deal with. Okay. What is the board of directors designation? There are two of them that we are interested in. One is audit committee, and the other one is the risk committee. We're going to be discussing audit committee when we're discussing internal auditors. Our board of directors are responsible for that. Okay. This person which is holding an associate level position, you're going to call them pawn. Hopefully all of you have know the word chess or have seen this board for the chess. I'm going to show you why these guys associate level positions, they are pawns, and these are the ones, they are your senior management, board of directors, and your president or CEO of the bank. They are hiding behind the pawns. Okay. One of these two senior executive vice president or executive vice president in your bank will be a chief compliance officer or money laundering reporting officer, MLRO. So CCO or MLRO, monitoring reporting officer. Okay. One of these two, senior vice president or vice president, will be your compliance officer. Yeah. And from AVP to entry level position, they will be your AML analyst. In America, you're doing an American certification, so we're going to call PSA as well, Bank Secrecy Act analyst or a specialist or officer or so on. These are your entry level position: AML analyst or specialist, or BSA analyst or specialist. Okay. And this is your risk committee. Okay, I have intentionally added AVP as an analyst because I want to build your 4I principle, understanding the right way. And although AVP are your team leaders or managers, AML, a part of your management, but they are responsible to reviewing the investigation of the customer's activity based on a 4I principle. So that's why they are part of your AML analyst team who are part of the investigation. Okay, let's start with the senior position, senior management. What is senior management is responsible for? They're responsible for approval of high-risk customers. When high-risk customers' account are being opened, high-risk customers' account, they are responsible for approval of procedures and controls in a bank. Okay. There's a complication. When we say that board of directors are the ones who are going to issue you the policy, AML policy, actually board of directors do not issue the policy. It's the senior management is gonna to evaluate if there is a need to draft and issue a new AML policy. So it means that why? Yeah, because your senior management is responsible for day-to-day operations. What does it mean? It means that senior management is the one who's coming to work 9 to 5 every day in a bank. Board of directors are not coming to work every day. Their board of directors are conducting their their meeting once a quarter or a few times of the year. They're not coming to work every year 9 to 5. These people, they are the owners. Some of them are the owners of the bank. They're not, they don't have that free time to come and check what's happening in a bank. They just conduct few meetings throughout the year to check on things. Okay, senior management is the one that is appointed by the board of directors. Especially this person is the one who is in direct contact with the board of directors. So this person is reporting to the board of directors, EVP is reporting to the senior executive vice president, and so on. So senior executive vice president is reporting to the board of directors, and the board of directors have appointed this person. We discussed this in our last training session, that the board of directors are going to appoint the chief compliance officer or MLRO. So when this person is, one of the senior management is appointed by the board of directors, and your chief compliance officer position is this appointment, before the appointment, the regulator evaluates the profile, evaluates and approves the profile. So means that board of directors are going to say that I want to hire Mr. XYZ in my bank to be a chief compliance officer. Board of directors, are suggesting it. So this profile is going to go to the regulatory body of your country. Regulatory body is going to evaluate the profile, approves it, and then that person will become the MLRO or chief compliance officer of your bank. Board of directors appoints it, but the ultimate approval is taken from the regulatory body of your country, central bank, Federal Reserve, whatever is equivalent to your country. So it means that there needs to be some approval before it is appointed. So when it's appointed, the chief compliance officer has been appointed. This person is going to come to work every day and check on things, whoever is doing under the other employees are performing in the compliance department. Every department, every group have their own senior management. First line of defense have their own senior management. Third line of defense, internal auditors have their own. IT department, human resource have everyone have their own senior management and have their own hierarchy, the way we just explained it. This hierarchy is there in every department. But we are concerned about the compliance and AML especially. So our chief compliance officer is responsible to lead the compliance department. When this person is appointed by the board of directors and the profile have been approved from the regulator, this person is going to directly report to the board of directors. This person is going to come to work every day, which is a fancy way, if you want to say it in a fancy way, which means coming to work as and responsible for day-to-day operations. So board of directors is going to say that we're not coming to work every day. We're going to come once every quarter to do a board of directors meeting. So the directors are going to say that I want you to be responsible for the whole compliance function, compliance department, and you're going to create or establish the culture of compliance for us. From if you are saying that take anti-money laundering seriously, we're going to be serious about it, and we expect everyone else to be serious about it in making sure that our bank is complying with the rules and regulations and the laws or applicable laws as well. Okay, and so they're gonna appoint a person, and they're gonna expect this person to come to work every day and evaluate if there is a need to issue a new AML policy. So this senior management is going to find a reason to issue a new policy. It's going to draft the new policy, and then it's going to present this AML policy to the board of directors for them to approve it. So board of directors are not the one who are going to decide that if we need to issue a new policy. Though they have no idea what's happening, or the majority of the time they have no idea what's happening in a bank. They are the ones that have given the responsibilities to the senior management to perform their responsibilities on behalf of the board of directors to make sure the bank is not being used for money laundering or trust financing purposes. If Citibank, if you have multiple banks in your country, let's suppose Chase Bank or Bank of America or etc., other banks have issued updated AML policy in the banks, and the senior management of the Citibank have found out that their AML policy is outdated now. It's very old now. So how they're gonna say that other banks have moved on, or they have updated their AML policy, where we need to update policy in our bank as well. So they're going to draft it and they're going to present it to the board of directors and saying to the board of directors in the next board of directors meeting that we need you to issue a new policy so that we are following updated laws and regulations and so on in our bank as well, because law or regulations have been updated. Our AML policy is now outdated because it was in accordance with the old law and regulations. Since the laws and regulations are now updated in my country, so you need to issue us the new policy or approve us the new policy. We're going to draft it for you. You just review it and have it approved. So this is the right way to understand it. A simple way of understanding it, that they're going to be approving the policy, but board of directors are not going to evaluate if there's a need to issue a new policy. They are expecting the senior management to guide them if there is a need to issue a new policy or not. Okay. Your compliance officer, like this chief compliance officer, is like a manager. If this person is a manager, compliance officer is like an assistant manager. Okay. So your compliance officer is responsible for approval of SAR or STR that we're going to discuss today. And compliance officer is also responsible for liaison with law enforcement agencies, working with the LEA law enforcement agencies. I'm going to write LEA, and I want everyone to be at a level where we can discuss things in a technical way. So I'm not going to write every time law enforcement agency. I do not have the time for that. I'm just going to write LEA. You're just going to assume that I'm referring to law enforcement agencies, FBI, or any law enforcement agencies in your country who deals with the financial crime. Okay. And AML analysts are responsible for investigating or reviewing the customer, and they draft and file the SAR or SPR. Okay, this is your hierarchy. We're going to come back to this hierarchy multiple times in our training sessions today and next future training sessions as well. Want to have clear concepts of how management of the risk of money laundering, terrorist financing is done in the bank, and who is responsible for what activities. Okay, let's start with the word suspicion or suspicious. Suspicious activity or unusual activity, unusual activity. Some countries, they call it unusual. In some countries, in some banks, in some regulatory and environment, they call it suspicious activity, referring to the same thing. We're going to continue with the suspicious activity because this is a commonly used word. Okay. So what is a suspicious activity? Suspicious activities means when someone is performing or someone is behaving or someone is transacting in a very suspicious way. So your transactions are suspicious or your behavior is suspicious. And we're going to discuss the behavior in the next Sunday in the 4th training session. I'm going to keep things simple today since this is a second training session. We're going to continue with the word transaction. So when someone is transaction means debit and credit transaction in your bank. Yeah. So when you are doing transaction using the bank's product and services, withdrawing the funds or transferring the funds or receiving the funds or online transfers or clearing or RTGS, real-time gross settlement or whatever you're doing, there are some indications that may result in that you are maybe doing money laundering or terrorist financing. Okay, we're going to be discussing in future the word red flags. What is the difference between a red flag or suspicious activity? Okay, it's like suspicious activity is like type of disease, and red flags is like symptoms. Symptoms. I have issue with the spellings, so I'm gonna check multiple times if I'm writing the right spellings or not. Okay, so like if someone is gonna get a cancer, cancer is one of the disease. There are multiple type of cancer or so on. So someone is gonna get a cancer. There will be some symptoms to the cancer, some indication that this person has cancer, like loss of appetite or loss of weight or etc. So symptoms are like someone like suspicious activity related to money laundering and terrorist financing can be done in different ways. There are different types of suspicious activities, like different type of disease, thousands of different types of disease. Each different type of disease have their own symptoms. So when you're performing suspicious activity, uh, specific suspicious activity related to money laundering or terrorist financing, there will be indicators how, or there will be symptoms how you are doing suspicious activity. Okay, if someone is doing money laundering, there are hundreds of different ways a money laundering can be done. Each way or type a money laundering is done have their own symptoms, have their own indicators, have their own red flags. So one type of money laundering can have multiple, like one type of disease have multiple symptoms. So one type of money laundering can have multiple red flags to that. Like you can like which helps you to identify, like if someone is like you see someone walking on a street, and you see that this person doesn't have any hair and doesn't looks like that the weight is the person is very skinny and doesn't have any hair on the head or something. So you're going to assume that this person is doing chemotherapy because of cancer or something, because this person have loss of hair or something like that. So there are some indicators that looks like that this indicative of particular disease. The same way, if someone is doing money laundering in a certain way, doing terrorist financing in a certain way, each certain way someone is doing money laundering, terrorist financing, there will be some indicators to that. So when you do some money laundering, terrorist financing in a certain way, we call it typology or modus operandi or characterization. These are some terminologies for that. I'm going to show you today what our different typologies are. So you just learn in today that the red flags are indicators of certain types of money laundering and so on. So these are indicators of certain type of money laundering or terrorist financing. Money laundering, terrorist financing can be done in different types. The same way, symptoms, there are indicators of certain type of disease. This is the same way that red flags are indicators of certain type of money laundering and terrorist financing. Okay, so what is suspicious activity means? Suspicious activity means when someone is either behaving or transacting in a way that is indicative of money laundering or terrorist financing. A person can do hundreds of different types of money laundering, which is can be thousands of different type of red flags. Like there are hundreds of different type of diseases, which can be their symptoms can be thousands of different types of way. You can assume that one type of disease can be can show different type of symptoms. So a money laundering can be done in hundreds of different ways, and their red flags will be thousands of different ways, because each type of money laundering will have different hundreds or tens of different ways in their red flags. We have a assignment for that, 475 different red flags that you're going to be doing in future when we have covered enough training session to find out how someone can do money laundering or terrorist financing and so on. Okay, so a suspicious activity is related to suspicion of money laundering or terrorist financing or proliferation financing or predicate offense. Okay, what is this word predicate offense means? Okay, let's discuss predicate offense. Okay, I need a volunteer today. Someone who wants to volunteer like the other person did in the previous training session. I'd like to take a new volunteer. If you want to raise hand, or if you want to put it on chat that if you want to volunteer, so you can, interact with me throughout the training session. This will be the benefit. Otherwise, others have to wait for that. Who wants to volunteer? I'm going to be using your name multiple times. I need someone's name. Okay, there is a question chat. Okay, let's go for Gubani. Okay, let's what's her spelling? Gurbani. Okay, so so she's the volunteer. I'm gonna be taking her name with the different examples. So let's start with let's assume that she's a drug dealer in India, let's suppose, involved in some illegal activities. And we're gonna discuss how she's doing activities and try to understand a concept called predicate offense. Okay, so let's say she smuggled some illegal drugs. Illegal drugs means your cocaine, heroin, and so on. So we're not discussing medicine, we're discussing illegal drugs that are used for for those activities. So she smuggled some illegal drugs from China to India. She committed a crime, and then she sold those drugs, illegal drugs. Okay, these are multiple, so large quantity of those drugs that she did. Then she sold those drugs in India, which earned her drugs proceeds. Fancy way of saying lots of cash. And then this is past tense, we are using past tense, so she have done these activities. Then she hid those drugs proceeds somewhere. He tried to hide the large cash from law enforcement agencies. And these days, she's trying to, so we are back to present tense. These days, she's trying to launder the drugs proceed. Yeah. These are proceeds. Proceeds means small denomination of lots of cash. Small denomination means $5, $10 bills. You sell your cocaine in small quantities, and those drug addicts buy in small quantities from you, and they give you a small denomination of bills. Okay, so she have lots of cash, which she's trying to launder these days. So this is the step one that she committed, and she have so far committed 4 different steps of suspicious activities. This is the 3rd one and the 4th one. I need a space, so I'm gonna move it to here because I will be writing something down here. Okay, so she's trying to launder these days some cash that she have hidden from the law enforcement agencies. Okay, let's communicate. Gubani, please unmute yourself.
Hi, yes, please.
Yeah, hello. Okay, so Gumani, is it a crime in your country to smuggle drugs, illegal drugs? Simple question.
Yes, it is.
Yes or no? Okay, so it's a crime. We're not discussing how what sort of crime it is, but we're discussing it's a crime, it's an offense. Okay, Gumani, is it a crime to sell illegal drugs in your country?
Yes.
Okay. Is it a crime to hide lots of cash in your country?
Yes, it is.
Yeah. And since you are doing this certification, we're going to assume that money laundering is also a crime in your country. Okay. Another question, Kubani, is that when you are smuggling drugs, is there a possibility that you result in injuring a human being when you're smuggling drugs? Have you seen any Hollywood? Yes, it can happen, right? Like you're smuggling and someone tried to steal it. You're smuggling, let's assume that you're smuggling between the borders, between border and India, and either you fight with the law enforcement agencies or the border patrol, those armies that they're trying to catch you, and you're using your gun or something, you're resulting in injuring a human being or something like that. Okay, is it possible that when you're selling the drugs, it results in injuring a human being?
Yes, it does.
Okay, so this
can have side effects, for example.
Yeah. As you're selling drugs to someone in someone else's territory, so they're going to say that why are you selling drugs? We sell drugs in this territory. Why are you selling drugs? So they're going to try to fight with you and then result in you injuring a human being or something like that. Okay, is it a possibility that when you have hidden your cash, someone try to steal it, finds out about it, trying to steal it, and you then injure that person as well, right?
Yes, yes,
Yeah.
correct.
Are you going to injure a human being when you're laundering your cash, your illegal cash?
Yes, people are capable of that, definitely.
Okay, no, you're not going to do that. In case of laundering the money, these are your activities that are
Not that.
punishable. Yeah,
Yes,
like this is a white collar crime or financial crime. You're going to the bank to launder the money. You're not gonna kill anyone, or you're not gonna injure a human being. You're not going to to a bank heist. You're not stealing any money from the bank. You're just going there. Either you're gonna hire an accountant for you who's gonna do money laundering for you, or a lawyer, or you're gonna do money laundering yourself. This is a financial crimes that results in 99% of the time not a human being. You're doing it in an educated way. We are in a sophisticated way. Okay, thank you, Gurmani. So she committed certain crimes. Why we discussing injuring human being? Because there are certain crimes that results in very severe punishment. Like you are committing certain crimes which results in either killing or injuring a human being. That will be a long time imprisonment, going to jail for a period of time. Maybe if you killed a human being, yeah, then that's your life sentence. Or if you're living in a effed up country, they're gonna hang you to you till death. There to So that's a very severe crime that you can commit, which is gonna result in a very severe punishment. And these are the crimes that if you're going to commit in injuring a human being or killing a human being, it's going to result in a severe punishment. But when you're committing a white collar crime, it's not going to result in any, maybe psychologically you are mentally you're injuring someone, or mentally you're disturbing, or mentally you're hurting someone when you're committing a money laundering offense, but it's not a physical thing that you're going to do against a other human being. So the crime that you're doing of laundering the money, that's a white collar crime, and the punishment is less severe. You see someone going to jail for white collar crime, they are going to jail for a few months or a few years, and they are out and they start doing the same thing. Like those people who have done um, white collar crime regarding hedge funds or mutual funds or something like that, they're going to jail most probably with a minimum security jail, something like that, where most of the people are have done white collar crime. Those who have killed human beings, they are going there in a very secure jail, where there are lots of guards there, and there are lots of people who have done uh, you know uh, much severe crimes there, and you're living there with them for the period of time that you're sentenced to jail. Okay, so we establish the fact that money laundering is a financial crime, a white collar crime. The punishment is less severe when we are comparing it, when you've done a crime of killing someone or injuring someone. If you compare it with this thing, there's a punishment is less severe. But she have committed all these activities. This is the whole crime. She's not doing just this thing or this thing. She got some illegal drugs, and she performed these activities, and these days she's involved in financial crime, but she have committed the whole steps, the whole activities, and so on. Initial three steps which she performed, they were illicit activities, just a fancy way of saying suspicious activities or illegal activities. So she committed some illicit activities which earned her illicit funds. So she have some illegal funds. Illegal funds means those drugs proceed. You're going to do illegal activities which going to give you illegal funds. So initial steps were illegal activities which she earned, and then these days she's trying to launder those illicit funds. Yeah, launder. Why would she launder the funds? She's going to launder the funds. She's going to say, if she have lots of cash, why she's going to this hurdle of laundering the money? She just why can't she buy things that she want to, or live a life that she want to? Why she have to do this activity? Okay, because she have to launder the money, because these days the year that you're living in, federal governments around the world are told or forced into being told, federal governments. We're going to discuss financial action task force in future. So these days, federal governments around the world, they're told to make sure expensive or luxurious things. If you want to buy those expensive things, you only are able to buy those expensive things through financial system. So if someone is going to go into this, going to this activities, into this pain of performing these activities or taking a risk of performing these illegal activities, she must, she's doing it to, of course, to live a life where the standard of living is very high. Like she wants to buy that expensive house. She always wanted to. She wasn't able to when for whatever legal activities she did. She said, I'm done with performing legal activity. I want to do, I want to find shortcuts and want to buy this expensive house. I wanted always to own that expensive car. I wanted always to own that expensive jewelry and so on. So these are the expensive things that she wanted in her life. Wasn't able to get it by performing legal activities, so she started doing illegal activities, and now she have enough funds to buy those things. But governments around the world are making sure those expensive things that you want to buy, if you are rich, you are only able to buy them through financial system by paying through banking channel, or by paying through, if you're going through fintech as well, you can pay through fintechs as well. So it has to be financial system you have to pay. So you can't buy a house in cash. They are going to make sure of that. You can't buy a expensive car, especially a new car. You may be able to buy a used car somewhere, someone is selling it, but that's not going to be an expensive car. If you want to buy a car in six figures price, you have to buy it. And if you want to buy that a house that costs millions of dollars, you're going to be buying through banking channel. No seller should be selling their expensive assets in cash. They need to receive the funds through banking channel. The buyer need to pay the funds through banking channel as well. So these days, anything 10,000 or less, they consider this to be something that you can use the cash in European Union and in US. But if something that costs $10,000 or more, you're going to be buying through financial system. And a house, of course, costs more than $10,000. A car costs more than $10,000. Of course, the new car, you're not buying Honda Civic or something. You're going to be buying some expensive car. If she have taken a risk of doing such a illegal activity, she's not going to drive any Honda Civic or something. So, and she want to buy buy that expensive necklace or jewelries or any other expensive thing that she always wanted, she's going to be buying through banking channel. Government are going to make sure whoever the sellers are who are selling these expensive things, they need to sell it through financial system so that they receive the funds through banking channel, through financial system. They are not receiving the funds in cash. Governments are making sure of that by creating laws and regulations in accordance with that. So if in year 2022, someone is involved in illegal activities, they eventually will have to launder the money to live that standard, high standard of living that those person always wanted. They will have to launder the money these days. They may not have to launder the money 30, 40 years ago. In the 80s and the 90s, they were able to buy things in cash, but these days they won't be able to buy those expensive things in cash. That's why money laundering is a crime in every country, and anti-money laundering, prevention of money laundering is a thing these days. There are lots of jobs in this because governments are forced into doing this, creating this laws and regulation where in the countries, every country almost, that they're making sure that you are not able to do this sort of activities. Okay, what is this predicate offense means? Offense is a fancy way of saying illegal activities or crime. What is a predicate crime? Predicate crimes are of 22 different types. So someone can do kidnapping and hostage taking robbery and theft, smuggling, like Gurbani, like she did, like we discussed example of. Someone is doing tax evasion is a crime, extortion, forgery, piracy, cybercrime, terrorist activities, insider trading, participation in the criminal activities, organized crime, or racketeering, like those Italian mafia movies that were made in the 90s. They were doing racketeering. Racketeering means that they're coming to your shop saying that we're going to protect you from criminal activities if you pay us every month. Those Italian mafias coming, that's called racketeering. Human trafficking and smuggling, this thing, illicit trafficking in narcotics, arms and ammunition, illegal trafficking in stolen goods, murders and grievous bodily harm. We're going to be discussing bribery and corruption when we're discussing politically exposed person in next training session. Fraud, counterfeiting of currencies, and counterfeiting of piracy of the products. That's like you're seeing Chinese copy of Chanel or Louis Vuitton, or different clutches or bags. They're Chinese copies of, or carbon copies of, or second copies of those. These are counterfeiting of products. Okay, what is fraud? You have to understand the predicate offense of a fraud is general public fraud, not a credit card fraud. Not this type of fraud that anti-money laundering analysts have to deal with. They are your general public, like your Ponzi scheme or pyramid scheme. Someone is saying that I can double your money in few days, double your capital in few days. If you invest in my investment opportunities, that the person is, committing fraud with the public by taking their money and not giving them back any of their funds. The fraud that certified fraud examiners are dealing with, CFEs, that fraud is your banking product related fraud. Someone is committing any fraud on an ATM machine, or fraud in by using a credit card or debit card, stealing someone's credentials. Regarding that, that is the fraud the CFEs, certified fraud examiners, are going to be dealing with. The fraud that you as an AML analyst will be dealing is a fraud that you will be dealing, that is going to be the fraud that is a general public fraud, fraud that is committed in significant amount of money, large amount of money. Yeah, these are the crimes. Ideally, you should be memorizing them, and to know that these are the illegal activities, 22 different type of illegal activities someone is going to do, which going to earn them illegal funds. And since you are going into the pain of taking a risk of doing these illegal activities, 20 different types of any of those, you will be earning high amount of proceeds. You will use those proceeds to earn or live a high standard of life, which includes you living in a very expensive house and cars and things, those materialistic things. And these things cost lots of amount of money, and your governments are making sure that if you want to buy those things, you need to buy through banking channel. So those people who are involved in these illegal activities, like you're seeing, like few months ago, that lots of Bitcoins were being hacked from their warm wallets or digital wallets. So those who are stealing those Bitcoins or Ethereums or whatever, how they're going to use this? They have to launder the money, eventually convert those cryptocurrency into fiat currency so that they can buy those expensive things that they always wanted in their life. That's why they committed those illegal activities. If they were wealthy enough or they were rich enough, they would not have done those illegal activities. She wasn't rich enough to do. She said, I'm done with performing legitimate activities. I'm not going to do illegal activities because I'm not able to earn that standard of living that I always wanted. She went into doing illegal activities, any of these 22 different type of those, which earn her illegal funds, which she's then going to use those funds to clean them so that she's able to buy things that she always wanted. So a predicate offense means that an offense that's earned you illegal funds. And there are 22 different ways that you can perform illegal activities, which are going to earn you, illegal funds. Okay, what's the difference between, I'm going to discuss 3 predicate offense: environmental crime, cyber crime, and human trafficking. The one that are written in bold, they are the one that are recently added. The other ones were there for quite some time, but the bold ones are recently added. We're discussing this European Union directives, the 6th one, but I'm not gonna explain that directive today. We're gonna discuss it when we are discussing chapter number 2. But 3 predicate offense that we're gonna cover. The first one is human trafficking and human smuggling. What's the difference between the two? So kindly be very active. So I'm not repeating myself. I'm discussing in the 4 hours new topics. We're not wasting time in repeating the same thing over and over again because you didn't bother being active when I was explaining it. So be kindly be very active. Yeah, I'm gonna check the spelling of trafficking. Okay, that spelling. Human trafficking is different from human smuggling. Yeah, in human trafficking, you are actually okay, let's start with the human smuggling. So in a human smuggling, you are smuggling person. Okay, let's go for Gurbani again. So she is living in India in both situations. Let's suppose in this situation. So in smuggling, she is asking that I want you to, like, she's saying that I have $100,000 funds available. She met a guy, a smuggler, human smuggler. She said that I no longer wish to live in the country I was born in. I have saved some funds, but I am too old to apply for any migration to Canada or Australia, and I'm not young enough to apply for a student visa. I'm not educated enough to apply for any employment visa as well. So I need to go to Canada, Australia, or US, developed countries and so on. So this guy said, okay, I charge this amount of money. She said, okay, I have this amount available. So this guy is gonna smuggle her and from developing countries to a developed country. So this is human smuggling, is when a person is gonna pay to be smuggled from a developing country to a developed country. And how they do it, this is a different matter. She's being hidden in some containers when she's going from in a vessel in a trade-based money laundering, or if there's a thing called being smuggling through borders, like they do it in Mexico and US. So they have created tunnels where they are smuggling people, or they're hiding people in trucks or containers or something, or hiding them in tunnels from Mexico to US, where poor Mexican people are being smuggled from Mexico to US because they were not able to live a living that they wanted to in Mexico. So they are going to a developed country, but they are paying for it. When you are able to pay for it to someone who's going to help you out, that's called human smuggling, which is different to human trafficking. In a trafficking, she doesn't have the funds for it to pay. So she wants to move from developing countries to developed country, saying I want to go to Canada or Australia or US to live, start living the life. So she found a trafficker. This guy is now a trafficker. This guy is going to say that, I charge $100,000 so that I can smuggle you. You have the option to pay me. She said, I do not have the option. I do not have the funds available. So this guy said, okay, that's fine. If you don't have the money, I'm going to still help you. But when you reach the developed country, you will be working for me, or working or doing something that I'm going to tell you to do. Because in both situations, you are living there illegally. When you reach the developed country, you're living there legally. You are not a citizen officially. You're not in any paper. You don't have the paperwork. She will be living anonymously, won't be paying any taxes, or will be doing the jobs, odd jobs, which are done in that are paid in cash and so on. Cleaning washrooms, or cleaning restaurants, dishes and so on. So the catch 22 is that when this guy is not receiving the funds from her, this guy is saying that I'm going to take you, however I'm going to take you, but when I'm going to take you there, you will be working for that company for the rest of your life. This is where I'm going to explain in an inappropriate way. This is called this thing, sexual exploitation. This guy is going to say that you do not have the funds available. So he's going to exploit her. He's going to say that you're going to come to America. I'm going to somehow traffic you, hide you somewhere, traffic you to a country, and then you're going to start using yourself for these purposes. And you're not going to go, and she's not going to go to any police or anything or law enforcement agencies, because she knows that she's living there illegally and she is being used for these purposes. Or sometimes, like Mexicans who are trafficked, Mexicans saying that we do not have the money, please help us move from Mexico to US. Those traffickers are going to say that, okay, if you do not have the funds available, then we are going to use you in that restaurant. We are either not going to pay you at all, or we're going to pay you very small amount of money, and you will be living in a somewhere where, in a room, 10 or 20 different people are living, and you will be there, our slaves, for the rest of your life. And you have to follow whatever we're going to tell you to do. In this case, since she saved enough amount of money, she's going to do whatever she wants to. Of course, she's living illegally. Yeah, she have to do things not to found out about that she's living in a developed country in a illegal way. But in these situations, she's not bound to follow the instruction of the smuggler. She was financially sound enough to pay to be smuggled to the other country. When she reaches US, Canada, Australia, whatever, or Europe, since lots of Syrians are doing this from Syria to European countries. So when you are smuggled there, she's gonna she is gonna do things on her own, find work on her own, live on her own. But when a trafficker is gonna help you, because she doesn't have the funds to pay for it, trafficker is gonna give her the place to live, where 20-25 different people are living in a small house, a small room, sharing the same room, and she will have to do things with what this guy is gonna say to, or where this guy is gonna say to work for her to work, to provide her services, so on. So that's the difference between trafficking and smuggling. Okay, I'm going to stop here. If anyone have any confusion between the two, sometimes this is a bit confusing. Hopefully I'm able to explain it, but if someone have confusion, please ask your question. And post your question on chat. I think chat is open. Yeah. So, okay. So no one has any question. Moving on. Predicate offense means this is a primary offense or crime that you have committed. Something totally different example. We have moved on from trafficking. In this example, this guy was doing the predicate offense, earning amount of money. Okay, there's a question: is trafficking, is it a choice or a force? We are assuming that we're not discussing something that a person who was kidnapped, like in African countries, they were kidnapped and were used as slaves in other countries and were sold for that. We're not discussing that. We're assuming that she's doing it intentionally. The forcing someone or kidnapping something, that's even worse. We're not discussing that. Okay, so the next one is predicate offense. Offense, I'm just going to check the spelling of offense. I feel that I'm writing wrong spelling. Okay, offense. So when someone is going to do predicate offense, offense means that a primary activity, primary crime, that is going to earn you illegal funds. 22 different ways you can do this illegal activities, which is going to earn you illegal funds. And the money laundering is a secondary offense. It's a secondary offense to that person who have done primary offense. Okay, if you're going to say that I'm going to hire an accountant, or I'm going to hire a lawyer, for that lawyer or an accountant, that would be the primary offense. But for Gubani, who have done illegal activities which earn her illegal funds, and she is laundering herself the money, that would be the primary offense, and that laundering the money is going to be the secondary offense. But if a lawyer or an accountant is helping you out to do money laundering, for that lawyer this activity will be the primary offense for them. Okay, so why are we discussing severe punishment or whatever? We are discussing it because we have established the fact that predicate offense are 22 different types. A predicate offense can be a primary offense. A predicate offense can be a secondary offense as well. If you're living in a poor country and you are rich enough because money launderers are rich people, lots of money. So if you are rich enough and you are able to bribe public prosecutor, that person who's going to prosecute it in a court of law, let's suppose she was caught doing this either or that. So if you are rich enough and you are able to bribe a public prosecutor or a public lawyer or attorney general, and bribing this person, saying that please only charge me for money laundering offense, do not dig whatever I have done to earn the illegal living, just for, charge me for the white collar crime that I've committed. This way, she's going to get a less severe punishment or easier punishment. She's going to say that I'm going to go to jail for a few months and I'm going to be out. I'm going to start doing illegal activities again. So around the world, they are trying to create a concept saying that money laundering is also a predicate offense, a secondary offense. So a predicate offense are 22 different types. A predicate offense can be a primary offense, and money laundering is a secondary predicate offense. So, and if someone is being caught for money laundering activities, they should not be sent to jail for money laundering, because money laundering is a part of a crime. This is the whole crime that she have committed. So if someone is being caught for money laundering, public prosecutors ideally should be digging how that person earned the illegal funds. And if they're going to dig about and they're going to find out, investigate those illegal activities, they will be punishing that person more severely for the whole crime. But if somehow you are able to bribe the public prosecutor, saying that please only punish me for the money laundering offense, do not find out how I have got this illegal money from, that means that you're getting a easier punishment. That should not be the case. You should be getting a severe punishment, because money laundering is a part of a crime that was committed because someone did something illegal which earned them illegal funds, which they are these days trying to launder. A person should not be prosecuted or punished for only money laundering. They should be punished for the whole crime. Of course, you're going to say that, accountant or a lawyer who's going to help you out, they should be punished for money laundering offense. Of course, they should be punished for money laundering offense. This accountant may not be helping you to do this activity. Grubani should be punished for the whole crime. Lawyer or the accountant may be punished for this offense because the lawyer and accountant had no idea, wasn't involved in these activities. So we're not discussing lawyer and accountant, we're discussing the person who is a suspect, who have done the whole crime, involved in this crime. If was caught doing that, should be punished for the whole crime, not just this crime. So this is called money laundering, terrorist financing, proliferation financing, and predicate offense. All of these four different type of activities someone can do, which are going to earn them illegal funds, and then they're going to launder those funds. Either you're doing money laundering or terrorist financing or proliferation financing. These are your secondary offense. Predicate offense is like if you want to give funds to the terrorists, you can give the funds either in a legal way or illegal way. If you're doing in an illegal way, or you're giving funds them which you earn through illegal means, then you must have earned those illegal funds through doing these 22 different type of predicate offense. So of course, the terrorist financing can be done through legal funds as well, like Osama working in a bank in Pakistan, saying that I'm going to save a small amount of money from my salary and give it to a terrorist who's going to do terrorist activities in Pakistan and Afghanistan and so on. That also means that Osama, a banker, is a terrorist financer as well. That's very much possible. Money laundering, you're not going to do it from legal funds. You're going to do it from illegal funds. And proliferation financing can be done from legal or illegal funds. I'm going to explain this proliferation financing when we're discussing sanction screening on 26th of November. You're going to understand that either you're giving funds to a terrorist, that's your terrorist financing, or you're cleaning your money, that's called money laundering. Why would you want to launder the money? Because you want to earn, or you want to live a high standard of living, and that's only possible when you own own expensive things, and you can't buy expensive things through cash. You will have to buy expensive things through banking channel. For that, you have to launder the money and so on. We're going to discuss in future how laundering is done through bank, and then you use those funds to buy expensive things. So second training session, I'm not going to just start bombarding you that all the concept, how this is how you launder the money, this is how you launder the money. We're not going to discuss that. We're discussing small concept that how to manage the risk of money laundering in a bank. You need to just know that how someone can use your bank for suspicious activities related to predicate offense, money laundering, and terrorist financing. So coming back to our concept, so how can someone do suspicious activity in a bank? They can do suspicious activity in a bank, which may be indicative of either money laundering, terrorist financing, proliferation financing, and predicate offense. Okay, you're gonna say that how can someone do predicate offense activities in a bank? Someone stupid enough to do these activities, saying that I'm gonna help you, give you insider information, or I'm gonna help you commit tax crime or something, and you're gonna pay me through banking channel. Like an accountant is saying that I'm gonna show you how can you you don't have to pay tax, or you're trying to avoid pay you're trying to hide your domestic and foreign income. And if a lawyer and accountant is helping you do that, and you're paying to that lawyer or an accountant through a banking channel from your bank to that person's bank, that person is receiving funds through by by performing predicate offense of secondary offense. Secondary offense means a lawyer is helping you out to laundering the money, because tax crime or tax evasion is a money laundering offense. So if someone lawyer is receiving funds through banking channel, that lawyer is going to receive funds from you through banking channel. So the your bank, who have an account of that lawyer, should be investigating the lawyer for predicate offense. So someone committing any of these 22 offense and stupid enough to receive funds directly into the banking account, the bank have to look for someone receiving illegal funds by performing predicate offense, or someone who is clever enough not to receive funds directly into the banking account, but by the receiving funds through in cash or receiving funds through cryptocurrency. That person will be converting their cash in, putting those funds into the financial system, or cryptocurrency being transferred from crypto to fiat currency. And then these funds will be used to buy those expensive things, to live the expensive life that the person always wanted to. So this is one type of predicate offense, that's smuggling or trafficking. Next one is cybercrime. Okay, let's discuss first the environmental crime. Okay, environmental crime. Environmental crime are of different types. Like the first one is a very famous one. Like if you are cutting down trees, like in some countries, if you want to cut the trees down, is considered to be a crime punishable by law, result in you being sent to jail. Like what's ever happening in Brazil, in Amazon forest, they're cutting down trees very fast. Every few minutes, every few hours, they're cutting down the trees, which is affecting the climate change or something. So in some countries, they are so serious about the environmental crime that if you're going to cut down the trees, they consider that to be a criminal activity. And if someone is paying you to cut down the trees so that they use these trees and their wood for whatever the reasons, making furniture or whatever, that's still a crime. If your government consider cutting down trees is a criminal offense. Okay, we want to discuss the one where wildlife is being used for environmental crime. Wildlife trafficking. What is wildlife trafficking? Where in Africa there are some poachers. A poacher is a person who's gonna kill an endangered species, animal species, for part of their body. Like rhino and elephant, they're famous for being their part of the body of their horn being used for medicinal purposes in China, or like crocodile or snake skin is used to make fashionable clutches or bags, or any type, or like shark, their fins. Shark fins are used in China for medicinal purposes as well. So any part of a animal's body where there's a demand for it for whatever the reasons, and if that person is gonna kill that animal for the part of the body and to sell it, That's called wildlife trafficking. We're discussing in Africa, because there's lots of things like poachers are in Africa and so on, but it can be done for like for a shark or dolphins as well, and so on. Okay, so a poacher is going to find that animal where there's a demand for their part of the body. They're going to kill that person, or they're going to seduce this person with giving them injection or something where that animal is unconscious for a few hours, and then you cut their part of the body and to be sold. Okay, so how this is going to be sold? When you have gathered enough, then you're going to sell this or to China, wherever. I'm trying not to be racist, but there's a demand for it in China for medicinal purposes and so on. So they're gonna send it to China through trade-based money laundering, where they're gonna create fake trade documents, or where they're gonna hide this part of the animal in a containers that you have seen. These containers, they're gonna commingle it with legitimate goods with illegal goods. Like a container can be open from each side. You're gonna put the horn of a rhino or elephant in between, and you're gonna put legal goods like chocolates or iPhones or laptop or something in each end of the container, but in the middle you're hiding those illegal goods. So they're gonna smuggle those things to wherever there is a demand for it, most probably in China, and the Chinese person is going to pay to that poacher or the poachers or any intermediary party who have hired those poachers. The Chinese buyers are going to pay to that intermediary party, and that intermediary party is going to receive the funds in a neutral country, because that intermediary party it's not directly going to receive the funds in African country like Sudan or Somalia or something like just where they are poor countries, and if you're receiving thousands of dollars from China, that's going to generate lots of red flags. So those Chinese buyers are going to pay you either in Dubai or Cayman Island or something in a neutral country, and that intermediary party is going to gradually send the funds from Dubai to Somalia and pay the poachers to find more rhinos and elephant and so on. So how money laundering is done in a wildlife trafficking? In 3 different ways. 2A, the money laundering in wildlife. Yeah, 3 different ways. They're gonna first source those material or those part of the animal body. They're gonna get it from most probably from Africa, where there is an abundance of those animals, and then they will transiting it through fake documents or hiding with a commingling with the legitimate goods in a container, and they will be reaching in a destination most probably be China. So sourcing from Africa, of transiting it by fake documents or smuggling it and one way or another, and then reaching to China and being paid for that. Financial Action Task Force have a whole publication for that, how wildlife crime is done. There are pictures for that in this report, like armadillo or rhino or elephants. They can be used by through trafficking it in containers and so on, and other animals as well, leopards as well and so on. And this is, I think, a bear skin being used for illegal activities. Madhura Shetty, brother, do you want us to listen to you breathing? Do you have any fetishes for that? Okay, so this is a document that Financial Action Task Force have issued, and in this document they're mentioning how some of this thing is going to be done. This is 72 pages document. I don't think so that any one of you are free enough to read the document. I will be sharing it. You can, but your concept is enough how I explain it. But if you have the free time, you can go and read this document. It's either publicly available, or I will be sharing it in your WhatsApp group if you want to read it. In this document, they're saying that how money laundering is done. Where they're going to source it somewhere, in an African country, then they're going to translate it, and then it's going to reach to the destination country. You just need to remember how money laundering is going to be done, or trafficking of wildlife is going to be done. It's going to be done through sourcing, transit, and destination. 3 different steps to that. How environmental crime. But we're not discussing trees or something. This is in some countries it is a crime. In majority of country, cutting down trees is not a crime. But in almost every country, killing a elephant for their horns, or killing a crocodile or a snake for their skin, or a tiger or lion for their skin is a is a criminal activity. No one's gonna let you do that. Okay, so this is environmental crime, and the last one is cyber crime. Cybercrime is a crime that is being done on internet. Yeah, we have all seen or when we use Windows, and Windows, we started using the word Windows XP and Windows 8 or Windows 9 or Windows 10 or Windows 11 or whatever. So you see lots of viruses, malwares. So there are ways for those hackers to steal your personal information. They are doing it these days through ransomware. Ransomware is basically when they hack your laptop or your PC, and where your folders and files are frozen or hacked, where you're not able to use them. The hacker is going to say that you have to pay me 5 Bitcoins, or pay me this $100 or thousands of dollars, then I will have you use this files back or folders back, the personal information. This is very frustrating because I'm not interested in Erica. I'm not interested in whatever you're doing in your home. This is very frustrating. That's why I make sure that no one is able to unmute themselves or chat, share anything. I've closed down this option because you're not able to control, you guys, your fingers, your thumbs, or your however you're using or attending this training session, using your iPads or iPhones or your laptops or whatever. We're not interested in whatever you're doing at your home right now. And others, especially, I haven't paid for to listen, you breathing or you're speaking. Kindly make sure that you're not forcing us to do listen to these things, whatever you're doing. Ransomware being, again, someone has hacked your folders, your data in your PC or laptop. You're not unable to use it. You have to pay that person, the hacker, so that you are able to use these days. Majority of the time, if you're gonna pay it, you're still not gonna be able to recover it. So that's why you're told to make lots of backups, so that if someone steals your or hacks some data on your laptop, you are still able to recover it because you have the backup for it as well. And you should put your data on cloud and as well, so that the data that you have in your laptop, if it's hacked, you are able to recover it. Okay, ransom means someone is stealing your someone is hacking your data and they want money out of it. Okay, next one is phishing. When someone is phishing, okay, so someone is sending you an email. An email is being sent in two ways, to A, to B. When someone is sending email in a bulk email, or someone is sending email through spear phishing. So there are bulk phishing, spear phishing. Bulk phishing means that when you are when you are a hacker and you are sending emails with attachment, there will be some attachment like an exe file or a PDF file or something, that you're sending emails with attachment to lots of recipients. Okay. And there's nothing common between the recipient. You just find lots, you found lots of email IDs, and you start sending emails to those email ID with an attachment, with the hope that if someone is gonna open that attachment, it's gonna put a bug in their laptop or on the PC, and that bug is gonna steal their personal information, send it to the hacker. Hacker is gonna then sell this personal information over the internet or dark web, wherever that person is gonna sell your personal information. Bulk phishing means that when you're sending to lots of random people with nothing in common between them, where you found thousands of emails, or you bought thousands of emails IDs from dark web, and you started sending them by making your email look like that your email is very legitimate email and being sent from a legitimate company, and by enticing people to open that attachment. If they're going to open it, then it's going to put a bug into their laptop. Spear phishing is when you're targeting an individual You're saying that you're going to send, you want to target to that very important person, and send that email with an attachment to that person with the hope that that person is going to open that attachment in the email. Either targeting that individual or targeting that one organization. So when you're targeting that one organization, it means that you're targeting all employees that one organization. You are sending to every employee of that organization this email with an attachment with the hope that some employee is going to open this email with that attachment, and that's going to put a bug, and you will be able to steal corporate confidential data this way. Or you're targeting one person, one individual person, which is that person most probably very important person, because you want to steal that person personal information that is in their laptop or PC. Phishing means you are sending emails with the hope, sending emails with an attachment with the hope that they are going to open the attachment, and you're going to draft the email in a way that you will make it long, so like that the email is being sent from a legitimate party, and very reputable party, which can be anything, making it look like that the email you are receiving from Google or Microsoft or any important companies who are sending you email with the saying that please open this attachment, we have important information for you, or this enticing you by giving you discount, 50% discount, 75% discount or something, saying that please open this file, I have very important thing, and you can avail this discount by opening this voucher that is in the attachment or something like that. So you're enticing people to open your attachment, which you're going to put a bug there, and you're going to steal person's data. Either all the employees data, you're targeting one organization of all the employees, or one individual person. That's called spear phishing and bulk phishing. Okay, I'm going to stop here. If someone have any questions regarding cybercrime or environmental crime, opening the chat option again. Kindly make sure that you are not forcing us to listen to you when we haven't paid for you to listen. There are plenty of videos on YouTube channel where it's called ASMR. ASMR, where if we have any fetishes to listen to someone breathing or something, saying something, we're going to go and watch these videos. There are plenty of people there. We're not interested in free of cost listening to you breathing or you saying something. Kindly control yourself. Okay. Environmental crime and cybercrime. Any questions, please? A question on chat: is cybercrime similar to white? Okay. Cybercrime is a of course a white collar crime, educated crime. Hacker most probably be the educated person who knows those C++ or C languages or Python or something. So it's a crime, but doesn't usually end up injuring a human being. So there are certain crime in a predicate offense that are not injuring any human being, like a tax crime. It's not going to injure a human being. Cybercrime is going to be the same one. Not going to, sometimes bribery and corruption is not going to end up injuring human being. The majority of them are you are hurting physically someone or injuring a human being and resulted in a very severe punishment. That's why we like your counterfeiting currencies is not going to injure a human being or something, but of course kidnapping is going to injure a human being. Robbery or theft is going to do that. Extortion, forgery is going to do that. Terrorism, of course. Racketeering is as well. Or you're stealing goods. When you're stealing goods, you're not gonna, it's not a piece of cake to steal someone's good. You're most probably stealing it by injuring a human being. Or if you're smart about it, when someone is not at home and you steal that, or someone is not at their warehouse or in a shop, you're stealing it, that means you're being smart. But if someone is already there and you're stealing something, you're most probably gonna injure that person for that, and that's a severe punishment for that. Gurbani, please.
Hi, Osama. So my question is, we just discussed environmental crime. So there are instances where factories or other organizations are polluting the environment or
chemical
harming
in the water.
water.
Yes,
So there might be regulatory impacts for that. Is it a part of the environmental crime?
Yes, there are where companies are polluting natural, by emitting CO2 gases or greenhouse gases, or polluting drinkable water by putting their wasted material in a water in a lake or something. That's also a white criminal crime. But this is a crime that is committed by entities, where we're discussing a crime that is committed by individuals that are, that's very difficult to identify. Like you can punish an entity because the entities are heavily regulated. Those entities who manufacture goods, they have to mention that they are inspected by the inspector to check that how you're producing your goods and how much plastic you're producing and wasting the plastic in the environment, and which is going to result in CO2 or other climate change or other greenhouse gases or something. So they will punish that person easily. The individuals that are doing these activities, some of them, we have no idea that they are committing these sort of crimes. So we are more interested in the individuals that are exposing the bank to money laundering, terrorist financing, or predicate offense activities, because your entities are easily able to identify, because they have to do lots of regulatory reporting. There are lots of they have they are inspected, they are regulated heavily. Those entities, those LLCs or public listed companies, if they're polluting, this earth for whatever greenhouse gases or whatever they are, they are easily identified and they are easily punishable. The individuals are the ones that are doing it without anyone knowing about it. Okay, next one. Can you yeah, can you throw some light on ransomware with the leg hack entire system so they cannot operate? They're not going to hack the system. They are going to hack your personal files and folders which you are not unable to access to, and they will ask you to pay, so that if you want to use that family pictures that you wanted, that you saved in your laptop, and you're you're unable to see those family pictures, the old pictures, you're gonna pay that person whatever they want to, because you do not have the backup for those family pictures or the wedding pictures that you had. So they will target those personal data that you have in your laptop. You will be able to open your Windows or iOS operating system or something like that, but you will going to find out that you can't access those personal files or folders. Okay, that's your, hopefully now everyone is on the same page. 22 predicate offenses that earned you illegal money, and then you're going to launder it. Why? Because you can't buy those expensive things that you always wanted, and you want to use those money for illegal activities. Use those money to buy expensive things. Okay, so we were discussing suspicious activity. Your bank is looking for someone is gonna do polluting water bodies is not done for end goal of earning money. Like it's not done for those things, but it's still a crime, environmental crime. You're not earning, but you're saving money. If you're not earning any money, you're trying to save the money, because the right way to dispose of those those uh, uh, harmful chemical would have cost you lots of amount of money, and the company is not earning any money, but they're trying to save money. That is another way of you basically doing illegal activities. Okay, so suspicious activity. So suspicious activity related to money laundering, terrorist financing, proliferation financing, and predicate offense. Your bank should be looking for those people who are going to use your bank to perform these activities. You need to identify them, and then you need to report them. So this is called suspicious activity of being involved in those. Who's going to do that? Either your customer is going to do that. Remember in the previous training session, we discussed controls against the customer. So customer using your bank to perform these activities, to receive the funds out of it, monetary gain, or an employee helping that customer out in performing these activities and receiving monetary benefits out of it directly into the banking account. So customer using your bank, or employee helping those customers and doing those and receiving those monetary benefits is called suspicious activity, and your bank need to identify those suspicious activity and report those suspicious activities. This is called I don't like this. Okay. Yeah, let's move this thing. I usually write this thing. So okay. So we're going to write it here so I can compare this thing, what I'm about to supposed to explain you the hierarchy as well. Okay, how do we manage the money laundering and terrorist financing risk of suspicious activity? We manage it management of money laundering, terrorist financing, and proliferation financing, and predicate offense risk. Yeah, when I'm saying these three things, you're going to assume that I'm also saying the predicate offense. I don't like, we're trying to save time. So just assume that when we're saying that, when I'm saying money laundering, you're just going to assume that every other three things are also included in that as well. Unless we are discussing the difference between money laundering or proliferation financing, or difference of money laundering or terrorist financing, something like that. We're going to be very in a rare case. Whenever we're saying the word money laundering, just going to assume that referring to all those four things. Okay, so how you are going to manage the money laundering and terrorist financing risk? You're going to manage it, this money laundering risk, in 5 steps. First of all, you should be able to identify the suspicious activity in your bank. The first responsibility or regulatory expectation is that your regulator is expecting you, the regulator who have given you the license to operate as a bank, is expecting your bank be able to identify the suspicious activity. How are you going to identify that? You're going to use automated tool. Automated tool that we're going to discuss in future. We have a training session for that. The technical training session. How we're going to take the example of FCCM, which is also called Mantas, to identify how alerts are generated. So the regulatory expectation is that you are supposed to identify all the suspicious activity that can be done by your customer, either himself or herself, or using the help of an employee by colluding with them. Automated tool is going to be used to generate alert on suspicious activity by using rules or scenarios. We're going to discuss them, all of them in future, the look back period, transactional count, thresholds, and so on. Second, when you have identified it, you need to then investigate it or review the customer, whoever is involved in that suspicious activity. Who's going to do that? AML analyst or specialist is supposed to do that. Investigate the customer. When you have done investigation, you have to then draft the SAR. What does SAR means? SAR means that when you are identifying someone to be involved in either suspicious behavior or suspicious transaction, you need to report that person. Report how? Report it through suspicious activity report, which is called SAR, or suspicious transaction report, is called STR. It's the same thing. In some countries, they use STR. In some countries, they use SAR. I'm going to use the word SAR because it's the right way to say it, because activity includes the behavior and transaction. If you're just going to say STR, you're just filing the SAR or STR on suspicious transactions of the customer. You're not filing on the behavior. I'm going to explain the behavior in the next Sunday when we have a training session, 4th training session. I'm going to explain how someone can behave suspiciously that result in reporting this person. And kindly please change your mentality, or change your behavior, or change your attitude to saying the word raising the SAR or raising the STR. That doesn't make sense at all. These are reports, suspicious activity report or suspicious transaction report. I'm not sure that you have ever used the word raising the report in your life. This phrase do not make sense. We file the report. We do not raise the report. These are all reports. So stop saying the word raising the report. Start saying the word filing the report. So we file the report means that you're supposed to say filing the SAR or STR. Stop using this terminology. Lots of people use it. It's a wrong way to say it, raising the SAR or raising the STR. Filing the SAR or filing the STR. You can use, if you are not filing it yourself, you can use the word recommending the SAR or recommending the STR. Stop using the word raising the report. It doesn't make sense. Okay, so someone who have investigated the customer is going to draft the SAR. I'm going to explain you today how SARs are drafted and how they are filed. Someone is going to draft the SAR and someone is going to approve the SAR. and then someone is gonna file the SAR. This is all these 5 steps are called management of money laundering and terrorist financing risk. Performing these activities is going to help your bank out in identifying the money launderer, investigating the money launderer, and filing the SAR of by reporting the person in a SAR, the suspect who's doing money laundering and terrorist financing. Okay, report to whom? Report to file the SAR to whom? File the SAR to the Financial Intelligence Unit, FIU. In America, it's called Financial Crime Enforcement Network, FinCEN. Every country, as per Financial Action Task Force recommendation 29, every country almost have a one FIU, Financial Intelligence Unit. What's the responsibility of an FIU? Responsibility in FIU is to receive the information. What is the word information means in the in case of an FIU? Information means SAR, STR, or CTR. SAR and STR is the same thing. In some South Asian countries or some Asian countries, they use the word STR. In America, Canada, in UK, they use the word SAR. The right way to say it is SAR. Wrong way to say it is STR. Should be saying the word SAR. Okay. And this is currency or cash transaction report we're going to discuss in future. FIU receive these reports. In these reports, SAR, STR, or CTR, it mentions information about those people who are involved in suspicious activities related to money laundering, terrorist financing, proliferation financing, and predicate offense. You're sending the SAR to the FIU. FIU is a governmental body. And law enforcement agencies are governmental bodies as well. Your, the one who investigate financial crime. Your regulator is a governmental body as well. Federal Reserve or central bank is a governmental body. Bank is we are assuming is a privately owned bank or publicly owned bank, whichever the case is, but it's not a governmental body. We're not discussing the government owned banks, not discussing the publicly, we're discussing the ones that are owned by public, like general public. They have banks that are listed in stock exchange, their shares are traded. So banks or financial institutions are supposed to file SAR whenever they see some, okay, that's another way of saying when you see something, you have to say something. So what are they seeing? When in your bank, you see someone doing suspicious activity related to money laundering, terrorist financing, and so on, then you have to say something. What you're going to say? You're going to file SAR, STR, or CTR against a customer. That's what means. See something, say something. Okay. Your regulator is expecting you to see everything. Means your regulator is expecting is that you are able to identify all the suspicious activity. The less the residual risk, the better your controls are. You should be able to identify all or at least 99% of the suspicious activity. You should know all those customers who may be using your bank for money laundering and terrorist financing purposes. If you are able to identify all of them or 99% of them, that means that you have a very effective control. Your goal should be to move from whatever however you're managing your money laundering, terrorist financing, move towards better, make positive improvement every year. If this is 72 year, this percentage is 72 this year, it should be 73 next year, 74 next year, and so on. You should be looking forward to reduce the residual risk. The higher the effective controls are, the lower the residual risk is. Residual risk means that you're unable to identify that someone is doing money laundering, terrorist financing in your bank. So FIU, Financial Intelligence Unit, receives SAR from you, and then they analyze the SAR, and they then analyze, and then they disseminate. We're going to discuss more about it, these 3 processes, in 4th training session. Okay. So your bank's responsibility to make sure no one is using your bank to do money laundering, terrorist finance activities, to identify, investigate, and so on. Who else is supposed to do it? If bank is doing it, who else is supposed to do it in your country? All obliged entities are supposed to do it. What is an obliged entity? Obliged entities are the ones that are exposed to money laundering, terrorist financing, proliferation financing, and predicate offense risk. Any company who's exposed to this risk, they are in the definition of obliged entities, and they are supposed to manage this risk doing this and doing this. Okay, who are others who are in the definition of obliged entities other than the bank? They are, I'm going to discuss them in chapter number 1, but just letting you know right now. They are your money service businesses, exchange companies, credit card companies, insurance companies, securities broker dealers, casinos, precious metal dealers, art dealers, travel agencies, car dealers, vehicle sellers, your gatekeepers, investment and commodity advisor, TCSPs, and real estate, and so on. Anyone, any sort of those businesses where the owner of those businesses are going to use this type of company to do the money laundering, or the business's customers or clients are going to use this business to do money laundering or terrorist financing. These are the businesses or entities, type of entities that are exposed to risk of money laundering, and they are supposed to manage this risk by doing this or by having a compliance function like this. So every obliged entity need to manage the risk, including bank and so on. Okay, so they need to identify suspicious activity, and then they need to investigate it. Who's investigating it? The AML analysts that are investigating the customer and filing the SAR on the customer. So who is the customer? Okay, let's make a case. Assume that Kurbani is our customer in our bank, Citibank, and she have multiple accounts in our bank. Let's assume that she have 5 accounts. Okay, that's it. This is the account number, and another account number in the Citibank. This one. Yeah, let's remove this one, and yeah, this account number and this account number, and so on. This one more, and okay. So she have multiple accounts in the bank, and let's say this is account opening year. It's usually called account opening date, but let's say account opening year, trying to save time. So she opened first account in our bank, it's on 7, then she opened it in 09, and then in 13, and in 18, and then in very recently. So some of the accounts are, let's assume their status. So some accounts are dormant, some accounts are active, some are inactive, and some are closed, and some are the recent account that she's opened is still active. Yes, so she have 5 accounts in our bank, and she have done suspicious activity in the account that she opened in 2009. This is where we identify that she is doing money laundering. Okay. We are going to then investigate the customer. Investigating a customer means that you are investigating the whole customer relationship the customer have with your bank. You're not investigating her one account where she's doing suspicious activity. You're investigating all the accounts of her activity. You're supposed to make right decision at the right time. Who are you? Who's making right decision? The person in your bank who are investigating the customer are supposed to investigate the customer, all the product and services, the whole relationship, all the accounts the customer have opened, and make a right decision. The right decision is when you are pronouncing someone to be a money launderer. Okay, when you are an AML analyst, you can only pronounce someone. Pronouncing someone is different from declaring someone. What is declaration? When you are declaring someone, you're saying someone that you are a money launderer and terrorist financer. I declare you to be a money launderer and terrorist financer. Declaration, authority to declare someone a money launderer and terrorist financer is of a judge or a jury, giving to them this authority based on a law. You, as an employee of the bank, you can't declare someone to be a money launderer because you do not have the authority. You can only pronounce it. Pronounce it by forming a suspicion of money laundering and terrorist financing. When I say that I have a suspicion against a person, I formed my suspicion against the person, and also reporting this person on SAR and or STR to FIU of my country, Financial Intelligence Unit. And when Financial Intelligence Unit is going to receive the SAR, they're going to work with the law enforcement agencies, take this person to the court of law, and a judge, a jury are going to declare this person in a verdict that this person is now being declared to be a money launderer, terrorist financier. You're not declaring anyone. You're basing your decision on this thing. Judge and jury are the one that declare it. So you, and as an AML analyst, when you're forming your suspicion and filing the SAR, you're pronouncing someone to be a money launderer, terrorist financier based on their activities in your bank. Activity of either the behavior or the transaction, debit and credit transactions in their banking account. Okay, so when you are investigating, we have a training session for that where we're going to discuss theoretically how you are supposed to investigate. So I'm going to defer this thing. This is what we're going to discuss in the 4th training session. This is what we're going to discuss in a 5th training session. How alerts are generated, how you're supposed to be identify the suspicious activity. And in the 4th training session, we're going to discuss investigation, how this is done theoretically. You're going to say that doesn't make sense. Why you're discussing in the 5th training session? The first thing that we need to do is there's a reason for that. You're going to find out when we're discussing is something a bit complicated. That's why we're discussing in the 5th. This is what we're discussing in the 4th training session, how you are supposed to, as an AML analyst, to review suspicious activities of a customer. Okay, so let's suppose when you have a customer named Gobani and you have investigated her from every angle, from all the activities of the customer, by reviewing her account opening form, by reviewing her bank statement, by reviewing her related document that she have shared with us, or by reviewing other related documents, which we call it to be the documentary evidence. So someone is gonna, it's called other relevant documents. Other relevant documents are the ones which you obtain from the customer when customer is found to be doing something suspicious. Okay, how can someone do something suspicious? Just one simple case where, let's suppose the previous one was okay, when she was had open an account in our bank, she said that she only going to receive one salary every month from her ABC company, and then she's gonna utilize those funds in a very predictable way. Okay, she opened the account, few months passed, and in a particular month, she received $5,000 into her account from a guy named John. This is very suspicious for us. Why? Because we are expecting her to only receive one credit amount every month. That is her salary. Let's make a realistic one. Let's say she's earning $2,500 per month. So she's expected to receive 2,500 salary pay every month from her employer, and then the employer, they run the payroll and she used this $2,500 to utilize it in a certain way. In this month, she received her salary plus some $5,000 from a guy named John. This is very suspicious for the Citibank. Citibank is saying that we were not expecting you to do that. Doesn't make sense with your profile. There's a deviation from the profile. So what they're going to do, they can, ideally speaking, they should be contacting the customer by performing an RFI, request for information, and they're going to ask the customer that why have you received these funds? First of all, give us the purpose, give us the relationship with the person who have sent you the funds, and justified why have you received the funds. If let's suppose she said that John is my brother who have given me $5,000 loan because I'm supposed to buy something, I didn't have the funds for that. I'm going to pay this for my brother back in a few months. So this is something that I have received because I basically requested my brother to give me the loan. That's why my brother have transferred the funds to my payroll account or my salaried account. So if she have able to justify the reason and satisfy us, that's fine. That's called your false positive. I'm going to explain this in future in detail. But if she's unable to justify for the reason why she's receiving the funds, or what's her relationship with the person who have sent the funds, then we're going to find it to be suspicious because we were not expecting her to receive another credit amount into her salaried account. We are going to report her on SAR based on a suspicion that we feel that she may be doing money laundering or terrorist financing in her salaried account because she did a activity that do not make sense. Whatever she said in her account opening form, she is deviating from that information, deviating from the profile. Whatever the profile we did on her when we performed KYC on her, we were expecting her to receive only one salary from this employer and then spend it in a very predictable way. She received something that we were not expecting because that wasn't mentioned in her profile when we did her profiling, when we did her KYC. Now she have done this activity that is a very suspicious. We're either going to ask her to provide the reason, or we are maybe decide to file directly the SAR. Ideally, you should be asking her that why she have received the fund, from whom she have received the funds. If she is able to justify it, then fine, you're going to close the case after investigating the customer. But if she is unable to justify it, then you are going to file a SAR because it looks to be a suspicious activity of money laundering and terrorist financing. So if someone who's going to do something which do not make sense to their profile, it's called suspicious activity. And that suspicious activity can be any of those four things. So when you identify someone to be doing something that do not make sense with the profile, you're going to investigate them, and then you are going to draft the SAR, approve the SAR, and file the SAR. Okay. In some situations, there will be situations where reporting or management of suspicious activity do not require filing the SAR. You're saying that, let's suppose she have done some suspicious activity in a insignificant amount. Let's say this is $500. So you're saying that, she have only done once. It's a one-off transaction or occasional financial activity. So why don't we do not want to find a SAR on her? We want to closely monitor her. It's called close monitoring. You are going to increase her CRP level, customer risk profiling level, to high risk customer. When I say that I'm not sure that she's doing money laundering, I want to review. I want to closely monitor her if she's going to do it again, or she's going to do it at a significant amount or a larger amount. Then I may decide to file suspicious activity report on her. But her amount is insignificant. An amount, her activity is only done once. I do not want to report this. So I'm only doing close monitoring by increasing the risk of the customer. So who's deciding that? The approval of SAR, of deciding whether to file a SAR or not, the responsibility of a compliance officer. This person who is reporting to the MLRO. If this person is an MLRO, this person is a deputy MLRO, deputy ML money laundering reporting officer. So your chief, your compliance officer is the one responsible for determining if there is a need to file a SAR on a particular case or not. If you're not filing a SAR, you are considering it to be a false positive. If you, there are two ways to decide not to file a SAR. Not to file SAR against a customer. SAR means suspicious activity report, that you are reporting a customer by pronouncing someone to a money launderer, terrorist financier. So when you are not pronouncing someone to a money launderer after someone who have done something suspicious, the case would be either you're closing the case on a false positive, which means that when she received the funds and you asked her the reason, she was able to justify it to you, saying that actually I'm not doing anything suspicious. This is the fund that I have received from my brother, and this is the reason that I have received the funds. They're going to say that, okay, we are fine with that. You have justified the reason. So we do not consider this activity no longer to be suspicious. Or you're not filing a SAR on her where you're saying that she's doing something suspicious, but the amount is either insignificant or she have done it on a one-off, means that she have only done it once, or occasional financial activity, haven't done multiple times. So we want to closely monitor her. If she's going to do it again, or do it multiple times, then we're going to file a SAR. It's not the significant activity is not suspicious enough to file a SAR right now, but we want to closely monitor her suspicious activity. So you're going to increase her risk to high risk. She will become a high risk customer, and high risk customers, we perform enhanced due diligence on them. EDT, enhanced due diligence, means you're keeping your enemies much closer because you feel that this person have suddenly become enemy to your bank, have done something that we were not expecting her to do, but the amount is insignificant. We want to monitor her closely. If she's going to do it again, then we're going to file the SAR on her. So this is the call option 1. You're going to deal with a suspicious activity where you are not filing the SAR, but increasing the risk of the customer to higher risk. Option number 2 is where you file a SAR on a customer. You're reporting a customer on a suspicious activity report. When you report a customer on a SAR in an option 2, in this case, on every person that you're reporting on SAR, their CRP level need to increase to very high. So all customers who have done money laundering, terrorist financing, or whatever, and you are decided to report to them on a SAR to FIU of your country, and your bank is maintaining the relationship with those customers, your bank need to increase all those customers' risk to high risk. If they were previously low risk or medium risk, you need to increase them to high risk so that you closely monitor them. If you decided not to close their account and decided to file a SAR, so that when you have filed a SAR, you will monitor them for suspicious activities in future. If they do it again, then you're going to be filing supplementary SAR. I'm going to explain this in a bit. Last option, option number 3. In this option, this is option 3, where your compliance officer decides to file the SAR on a customer and also close the account or close the relationship. Okay, if we are filing SAR on Gurbani, who have done something suspicious in this particular account, we may decide to close this account, leave the other account open, or leave the other account, the status as it is, or we may decide to close the relationship, means we close all the accounts that she have in our bank. Whatever the situation is, your chief compliance or your compliance officer decides to deal with the situation. So by filing the SAR and either closing the one particular account or all the accounts, or by filing the SAR and also increasing the risk of the customer to high, or not filing the SAR by just closing the account, by close monitoring the account, by performing enhanced due diligence on the customer. All of this is going to happen when customer suspicious activity have been identified. AML analysts have investigated the customer, and this person is going to then discuss the case with the boss compliance officer. Okay, so how do we actually file a SAR at all? We'll be saying the word in the last hour or so, half an hour or so, filing the SAR. How does this filing of SAR means? So when you apply for the job in future, when you've done your camps, your skills that they will expect you to know, your hard skills will include SAR filing or SAR writing. So you have to build those skills, how this is done, filing and writing. It is done 2 ways: manual filing of the SAR or automatically filing the SAR. Manual filing the SAR is where you are filling the SAR form and submitting it to the FIU, or courier the form and supporting document to the FIU. Let's supporting docs to FIU. Let's discuss this, how this is done. I'm going to come back to this thing to explain you why this matters in a bit. Okay, SAR filing. Yeah. SAR filing is a multi-step process where you are letting the FIU, Financial Intelligence Unit of your country, know about a person who have done something wrong in your obliged entity or in your bank, reporting the person. Okay, this is a format that I found over the internet. I'm not going to be sharing any documents of my bank. So I will only be discussing things that are publicly available that we can relate. So you're going to use this information. If you do not have the exposure, you're going to use this information to apply for the jobs, and you're going to try to impress your employers to say that I know things. I do not have hands-on experience, but I know things because I've gone through templates or information that are publicly available, but I do not need to be trained as much because I know things. This will help you to get that particular job. In the examiner is not expecting you to do SAR filing or something. In the exam, your questions are multiple choice, but the examiner is expecting you to know, have a concept that there is a thing called SAR filing. Okay, let's start. It's a 4-page document. It's a public document that was available, a format that helps us to identify how SAR filing is done. Page 1 of the 4. The first step is mentioning the date when you are filing the SAR. Easy thing, you're going to mention whenever you're filing the SAR. The second is you need to identify if it's the initial report, corrected report, or supplementary report. Initial report means that you filing the SAR on a customer for the first time. If you are going to file SAR on Gurbani on her suspicious activity on this particular account, and that would be like the initial SAR on her. Initial SAR means SAR filed for the first time on this customer. Okay, so your bank is saying that we never filed a SAR on this customer before. This is our initial SAR on her for the first time you're filing the SAR on her. That's your initial SAR. The corrected SAR, is the one where you found any deficiencies in the previous SAR. You are making amendment and refiling the SAR. Either that correction is being identified yourself, voluntarily identifying it, or your FIU to whom you have sent the SAR, they identified it for you, saying that you mentioned some information which we feel that is a wrong information. We want you to make amendment and send it again. So that's corrected SAR. What is supplementary SAR? Supplementary SAR means that when you're filing a SAR on a customer, it's gonna, for the first time, it's going to be the initial SAR. She has no idea that a SAR is being filed on her. Why? Because these things are confidential. We do not let the customer know about it, that the SAR is being filed. So if she continues to do suspicious activity, let's suppose we filed a SAR on her and we opted towards option number 2, where we file the SAR and we start closely monitoring her, that one particular account and all the accounts as well. So she have no idea that her Citibank have filed or reported her to the FIU of the country. She continued to do money laundering. So if you are not closing the account of the customer, is your bank supposed to report to her on SAR again? Yes, your bank have to. That's called supplementary SAR. Supplementary SARs are filed in 2 situations. Situation where a customer is doing money laundering in the same way or fashion, the same typology, continue to do money laundering, continue to do money laundering in the same way, and typology. Even if you have filed a SAR, of course, you have no idea that she have been reported. She got confidence. She said that my bank didn't investigate me, didn't ask me anything. So she started using the bank to do money laundering, continue to do money laundering in the same suspicious way. Or she start doing money laundering in a aggravated way. Aggravated means that she got confidence and start doing it she was doing money laundering of the amount, let's suppose, $25,000. And now she got so much confidence, she started doing money laundering of per week of $250,000. She said that, no, my bank is not asking me anything. So let's just, start doing it in an aggravated way. I'm just confirming the spelling. Aggravated. Making it worse, you're doing it in in a larger amount also, or so on. Okay, so supplementary SARs are filed if you are not closing the account or not closing the relationship. Then you have to report this customer again. Okay, how like, are you supposed to report the customer the very next day of the SAR that she's filed after the initial SAR has been filed? No, you have to wait it out and see that if she's continuing to do it, that can be, you can file a SAR a week later, supplementary SAR a week later on her, or a month later, or 6 months later, or 1 year later. However, your bank is going to determine that this is a continued activity or is an aggravated activity. I need to report this customer again to the FIO. Okay, how many SARs can you file? Like, if your bank do not want to lose the deposit, we are deposit centric world, a materialistic world. If you do not want to lose the deposit of the customer, banks will start filing supplementary SARs, hundreds of them. Hundreds of SAR will be filed on each customer. Supplementary SAR every 2 or 3 months later, a bank is filing SAR on this customer, do not want to close the account. So your bank will be forced into having a supplementary mandatory SAR policy. This policy is going to determine that how much maximum SARs you can file on a single customer. You're going to determine that. You're going to say that, let's suppose on a customer that you can file maximum 5 SARs, then you have to forcibly close the account. So you filed an initial SAR on a customer, and then you filed 5 supplementary SAR, means that total 6 suspicious activity reports have been filed on her. Then your bank will be closing the account. Either your regulator is going to define that your maximum how many SARs you can file on a single customer, afterwards you have to close the account, or your bank, if your regulator is not forcing you, then your bank, every bank ideally speaking should have a policy where they're going to determine that how many SARs they can file. If you're not going to put a maximum limit or threshold there, then banks will continue filing a SAR. Banks will continue letting the customer do money laundering by reporting them, and there won't be any end to this thing. You have to force yourself in closing the account by you're going to say that enough is enough. Now we're going to close your account because you're doing your this activity either continuously or you are doing it in an aggravated way. We have done so many SARs and now we are closing the account. But you're going to not reveal this information to your customer. Yeah. So you want to mention when you're filing the SAR, is it a first time you're filing a SAR, or corrected SAR being filed, or a supplementary SAR being filed on a customer? Next, you're going to mention about your bank. What's the name of your bank? Reporting of a financial institution name, name of the bank. If your bank have a unique code given to or license number, you're going to mention that. Address, head office of the bank, name of the branch where the account was open. We are not discussing internet banking. If you're filing SAR on a digital account or internet banking or any account, then you're going to not mention in the name of the branch, because digital banking accounts do not have any name of any branches. If a person you're reporting have an account in a particular branch, then you're going to mention the name of the branch code, and the address of the branch, and you're going to mention who your regulator are. Why? Because banks have their regulator. Not just banks are filing the SAR, obliged entities are filing the SAR. Who can be obliged entities? Casinos are obliged entities. They can file a SAR on anyone who's coming to the casino and laundering the money. Insurance companies are supposed to file the SAR as well. So there are other obliged entities who are not under the license of Federal Reserve or central bank. They have their own regulator or supervisors. So you're going to mention who your supervisor is when you as a casino or as an insurance company you're filing this up. Mention their supervisory body name. If you are a bank, you're just going to mention the supervisory body as a regulator or a Federal Reserve or a central bank, and so on. Next, you're going to mention the person who has been appointed by the board of directors in your bank to be a chief compliance officer, the person responsible to lead the compliance department. Your board of directors are supposed to leading the whole bank to make sure the bank is not being used for money laundering, trust financing, and so on purposes. But they then appoint their own leaders who are leading the individual line of defenses. Chief Compliance Officer is leading the second line of defense, compliance department. So you're going to mention in the SAR that who is your Chief Compliance Officer, this person's name, designation, phone number, email addresses, fax number, and so on. And then you're going to mention the person whom law enforcement agencies or FIU should contact for assistance, a person other than MLR or Chief Compliance Officer. Who would that be the person who they should be contacting for assistance? The person who approved the SAR, the person who liaison with the LEA, law enforcement agencies of the country, and FIU of your country. So you're going to name the person who is a compliance officer who most probably approved the SAR. That person will be helping them out in dealing with the matters related to the SAR. If they need any information, more information, any clarity on anything, law enforcement agencies or FIU, they will contact this person. This person will provide the information. More about it in future when we're discussing subpoena and search warrant. Okay, this was page number 1. We have basic information about your bank. Next one is information about the person. We no longer call this person to be a suspect. If you are filing SAR on Gurbani, she's not a suspect, but we call that person to be reported person. The person who has been reported on suspicious activity report. We're trying to become our society these days are trying to become a more politically correct. So we stopped saying suspects, started saying the word reported person. So what is then a reporting person? Reporting person is your obliged entities. Obliged entities that are filing SAR. They are called reporting person. Reported person is the one against whom you have reported the SAR. Okay. So we're going to mention her details. If we are forming a suspicion on her, saying that it doesn't make sense, whatever the activities she's doing, it feels like to be of money laundering, terrorist financing, or whatever. So we are going to mention her KYC information, her name, father name, address, other known addresses, her cell numbers, and government issued identity card number, tax number, date of birth, nationality, and so on. But and what sort of account that she have with our, is she our employee, account holder, and so on. Okay. The most important thing that is on this page is the one where they're saying, is the relationship is still maintained with the person or not? You can file a SAR on an active account, inactive account, dormant account, and a closed account as well. So if you're filing a SAR on a suspicious activity that's been performed recently, let's suppose she performed this activity a week ago or a month ago, then you identified it, you investigated it, and now you're filing it. That means you're making right decision of filing the SAR against her at right time. If you are filing a SAR, suspicious activity report, on a closed account or an inactive account, the activity that was done long time ago, that's still fine. You're still making a right decision. You're just making a right decision at a delayed time, means that you are making a right decision of reporting this customer few months later, few years later, because you identified this suspicious activity very late. You identify this activity that was done few years ago. Like you can file a SAR on a customer on activity that was done 10 years ago, 15 years ago, or so on. You're still making a right decision of reporting the customer, but it's a delayed decision. It's fine. It's better than wrong decision at delayed time or whenever you're making the wrong decision. Okay, what is a wrong decision? Wrong decision means that there's such a thing called safe harbor or immunity. What does this mean? Your AML analyst have a safe harbor or immunity available where a customer cannot file a lawsuit against AML analyst or compliance officer, chief compliance officer, and so on. Chief Compliance Officer. CO means Compliance Officer, and Chief Compliance Officer, and so on. So a customer against whom you have reported the SAR, the customer who is reported on SAR cannot file a lawsuit against you. You have the safe harbor available to you when you're filing the SAR. So first of all, customer should never find out that he or she has been reported on SAR. If somehow customer finds out about it, customer cannot do anything against any of these banking employees, because in a law, it should be in your country a law where they give safe harbor to people who are responsible for investigating, drafting, approving, and filing of the SAR. There should be have immunity available where customers cannot take them court of law, where the customer, what the customer is going to do? Customer is going to say that, why did you reported me on SAR? I wasn't doing anything, money laundering or something. If you had asked me, I would have justified this and so on. So in order to encourage the banks to, when they see something, they should be able to say something, to encourage them. They are given, the employees of the compliance department are given safe harbor and immunity, so that no customer should be able to file a lawsuit against them. So what is the wrong decision? The wrong decision is when you decide to not to file a SAR. Okay. I need a space. Okay. So wrong decision is called willful blindness. Willful blindness means that you are looking the other way, where cases, situations or cases where someone is doing money laundering, cases where compliance department decides not to file a SAR against a customer, where you decide not to file a SAR on a customer, but you should have filed a SAR on a customer. That's called willful blindness, where someone is intentionally decided not to file a SAR, or someone unintentionally decided not to file a SAR. The decision is either intentional. Your intentional means that, suppose you found out that one of your friend alert have been generated, or one of your friend, you are an AML analyst, and you were investigating, you found out one of your friends have an account, and you are investigating the customer. What you're going to say, that I'm not going to report my cousin, my friend on a SAR. So you intentionally saying that not to file a SAR, we should have filed a SAR against the customer, or you unintentionally decided not to file a SAR on someone where you should have filed a SAR on that particular case. So this is called wrong decision. You made a wrong decision on the customer. So does wrong decisions have any consequences? Right decisions do not have any consequences when you're reporting the customer. The customer cannot take you to the court of law. So what's going to happen when you're making a wrong decision not to file a SAR? The wrong decision is going to lead to jail time, imprisonment. Imprisonment to whom? Imprisonment to you being an AML analyst. You are the one who are investigating the customer. You are the pawn. You are the one who have given the authority to investigate and refer if there is a need to file a SAR on a customer. And if you decide not to file a SAR on the customer, you as an AML analyst, you are doing a very high risk job, where you can be sent to jail for cases where you did not file a SAR. You will be sent to jail, imprisonment. You will have to pay fines and penalties. Maybe in some cases, you may lose your job, or that may result in you being blacklisted from the banking industry. You won't be able to get a job because your regulator may blacklist you, and you may also have to do clawback as well. Clawback means that you have to pay back the remuneration, the salary that you receive from us in the previous months, and the bonuses that you receive from us in the previous months to the back to your bank. So severe consequences if you are making wrong decision, willful blindness, where you are either intentionally looking the other way. Okay, I'm going to check this. I think spelling is wrong. Willful. Okay, I think it's double L. So you are looking the other way intentionally or unintentionally, where you're not filing a SAR, you're not pronouncing someone to be money launderer, where you should have pronounced that person to be a money launderer or trash financer. There will be consequences against you. There will be consequences against you where you are also doing tipping off. Tipping off is a crime. Tipping off means that you are letting the customer know about the SAR filed on that customer. That's gonna result in the same consequences that may happen when you decide to not to file a SAR. That's gonna happen with you, of you being sent to jail or fines and penalties and so on. This thing. In one side of the coin, you are given safe harbor to file SAR on any customer you want to, and customer can't do anything about you. And when you decide not to file, or when you decide to file a SAR, plus you're letting the customer know about it, there will be severe punishment against you in these situations. Okay, I'm going to move because this uh, doesn't look good. So let's move it to here to. Yeah, okay. You're doing high risk job, and senior management is responsible to evaluate AML policy and so on. So the concept is SAR filing is encourageable. They are encouraging you in this situation, encouraging you to file as many SAR as possible. Find, find your customers who are doing money laundering and so on. Nothing's going to happen to you. No one's going to send you to jail if you are filing the SAR. But if you're not going to file it, or if you're going to file it and letting the customer know about it, this is the what you're going to happen against you, and it's a very high risk job. Okay, so coming back to this situation where can you file a SAR on a closed account? They're asking that, are you still maintaining a relationship with the customer or not when you are filing the SAR? If you're going to say that, no, I'm not maintaining the relationship with the customer any longer, either the customer voluntarily have closed the account, or that we have closed the account before filing the SAR, you should not be doing that. You should be filing the SAR and then close the account. But if you have done that, your bank wants to know that if this activity is being reported on a closed account, that means that possibly that account was recently closed, or an account was long time ago closed. You identified this activity late, you're making right decision at delayed time. That is still possible. That's still fine. Ideally you should be doing right decision at the right time. Identify suspicious activity and file the SAR right away. But if you're filing the SAR, right decision means filing the SAR. When you're making right decision and it's delayed, that's still fine. It means that you found out suspicious activity very late. You investigated the customer and you file the SAR right away. When you found out, although you found out very late, that's still fine. This is better than you not filing SAR at all. This is a wrong decision. Wrong decision is going to result in you being sent to jail. Any of you, anyone who's working in a compliance department. It's better than you making right decision at the right time, or you making right decision at the delayed time. That's fine. Nothing's going to happen. But this is gonna result in very severe punishment against you being an employee to the bank. Okay, so you're gonna mention that, are you filing the SAR on a closed account? That's fine. It's frowned upon that you're filing it at a delayed time, but it's still acceptable if you identify that someone did some suspicious activity 10, 15 years ago, account was closed long time ago, but you're now filing the SAR because you identified this activity late, but still fine. Just mention that. Okay, and then you're going to mention, capacity in performing the transaction, if it's an individual or some mandate holder or signatory or something like that. We're going to discuss more about it in future for signatories. Okay, you can also mention that what are the other parties that were involved in suspicious activity with her. Rubani is doing suspicious activity. If she's doing suspicious activity, someone else, mention that person. And if that person have an account in your bank, mention that person account number, account date, date of birth, and so on, some basic KYC information of the involved parties with whom she is doing money laundering or terrorist financing with your bank. If you don't know who she's doing it, if you just know the name of the person, just mention that. If that person have an account in your bank, mention other details as well, KYC information of the customer. Okay, in page number 3, things are going to get more interesting. You have to mention what activity that you found to be suspicious, the date of it, the amount of it. This is one transaction. But if you find multiple transactions, this is transactions with an S, then you have to select the major transactions that you feel that are suspicious. Let's suppose she did multiple transactions that resulted in $225,000 or $250,000, lots of. So you're gonna say that we can't just start reporting every transaction she's doing. We're just gonna select 5 or 6 or 10 major ones. We're gonna mention their dates, their amounts, how she's doing it, the mode and means of the transactions, the description of it in the SAR reporting. If she's doing multiple transactions. Okay, next one, very important. You have to mention why you feel she's doing something suspicious. Why are you pronouncing her to be a money launderer, terrorist financer? You have to give brief narration, which is also called reason for suspicion. You are forming a suspicion on her. You as an AML analyst or compliance officer or chief compliance officer is forming a suspicion of money laundering and terrorist financing, proliferation financing, predicate offense, whatever. You have to give us the reason why. Who's asking you this? FIU, saying that please give us the reason. So in this one, you have to mention in a very brief and selected words that why you feel someone is doing money laundering. But you have to be very calculated, in a very cautious and using calculated words, why you think someone is doing money laundering and terrorist financing. I'm going to explain this more in future, why you need to be very calculated, because this thing sometimes can backfire as well against the bank. You're going to mention why she's doing it, and very, very few words, 1 or 2 paragraphs. You're not going to write essays. No one is expecting you to write, because FIUs receive lots of SARs every day from lots of obliged entities and banks. They do not have the time to read your essays that you're watching. They just want you to mention in a very brief way why you think that someone is doing money laundering. Just mention that, summarize your suspicion against the customer in a very short way, and just mention that. Yeah. Okay. So next, you have to mention what sort of predicate offense, nature of suspected predicate offense that she is doing. This is called typology, characterization. Which is just a fancy way of saying characterization. Is a fancy way of saying that what type of money laundering, terrorist financing, predicate offense she is doing, and also called in a Latin terminology modus operandi. Modus operandi is a mode of doing criminal activity. Yeah. So you have to mention that how she is doing, what sort of suspicious activity she is doing, reason for suspicion, and type of money laundering that your bank think that a person can do. Okay, what are the different type of money laundering a person can do? This is a document that I'm going to be sharing with you for you to read. Main typologies a bank is exposed to money laundering and terrorist financing risk. Someone can use someone's personal account for money mules or something. Elisa, I will ask you to share your audio. Right now, I'm not interested, and none of others are interested in listening to you, please. Okay, so main typologies, how someone is exposed to money laundering and terrorist financing risk. Either you can use steal someone's identity. Either you can use politically exposed person that we're going to discuss in future. You can use your debit card or credit card to do money laundering. You can be a DNFPB designated non-financial business and professionals or high worth customers. You can use money laundering to do through cryptocurrency. You can use the money laundering through legal arrangements, through trade-based money laundering or something, or front companies or shell companies. You can, this is a short shipment or a TBML typologies. You can use money laundering to use your foreign subsidiaries to do money laundering. This is called there's a terminology for that. It's called buyer. What's the buyer? Okay, let me find it. I forgot the terminology suddenly. Straw buyer. Yes, straw buyer. There's a straw buyer. You're gonna, if you worked in sanctions, you know this, and if you haven't, you're gonna do the sanction certificate. You're gonna find out what is a straw buyer means. Okay, and next one is accounts where exchange companies, money service businesses accounts are being used, or you're doing money laundering through cross-border transaction and so on. I'm going to share this with. We're going to discuss this gradually in our future training session, but I want you to read this document, the 2-page document that will help you how someone can do money laundering like we discussed a few hours ago, that what are the types of money launderings are, like type of diseases are cancer and so on, and how someone is going to behave, or when they have the cancer or symptoms of that. There's another way of saying is different ways of doing money laundering. These are the different ways of doing money laundering. If someone is doing money laundering in a certain way, there will be different ways, there were different symptoms of it, so different red flags of it, how one type of money laundering is a indicative of. So these are the typologies, types of money laundering, 2-page document. Kindly read this. We're going to be discussing that in future and gradually in our training session in future, sometimes few aspects of it in future training sessions. Okay, so you want to identify how someone is doing money laundering when you're filing a SAR. When you have done that, you have to there is a concept of FIU that is very recent. Countries around the world have established FIU, like this is a concept like 20, 25 or 30 years old concept. Law enforcement agencies have been around for quite some time. FIU is a very recent concept. So when there was no FIU in your country and banks or obliged entities used to find customers who are doing something suspicious, they directly reported those things to LEA. So SARs were being filed few years ago. When your country did not have FIU, they were filing it direct to the LEA, law enforcement agencies. Right now, almost every country have their own FIU, and FIUs receive the SARs from all the obliged entities. SARs mention the customers who are using that entity for money laundering and terrorist financing purposes. So this form mentions that have you ever reported any transaction before to any LEA? So if you have reported a customer long time ago, when we used to report customers direct to LEA, you're going to mention that, yes, this is the transaction that we reported to LEA when we used to report customers to LEA, and we are letting you know about it as well. So it's when you're, it most probably be relevant, this type of topic, when a country who recently formed an FIU, when they did not used to had FIU, they directly used to file SAR to LEA. But these days, we file the SAR to FIU, and then FIU disseminates the SAR to LEA. We're going to discuss more in session number 4. Okay, page number 3 was about how someone is doing suspicious activity. Page number 2 was about KYC information of the customer. Page number 1 was about your bank, name of the bank, MLRO name, compliance officer's name. The last page. In this page, you're going to mention the accounts data that the customer have with your bank. Like Gubani have 5 accounts in our bank. These are the accounts that she have. When you're filing a SAR, you have to mention what is the main account, what is the linked account. So there are 2 types of account you need to consider in filing the SAR. Okay, main account would be the account in relation to SAR will be where she is doing suspicious activity. Okay, if you're going to say that she's doing suspicious activity in multiple accounts, so can 2 accounts be the main accounts? No. If she's doing in 2 accounts or 3 accounts suspicious activity, you need to identify that one particular account when she's doing it suspicious activity at a higher amount. Make that account to be the main account, and every other accounts will be linked account or allied account. This is just a fancy way of saying that the accounts which either she is not using for money laundering purposes, or if she's using it, but she's using it at a smaller scale for suspicious activity. Main account that you're going to declare will be the account whose supporting documents you're going to be sharing. What is supporting documents? You're filing a SAR by filling the form, the template that your FIU have provided to you to fill the form. You're going to then have to provide supporting documents about the customer that makes your case against the customer very strong. You're pronouncing someone to be a money launderer. You need to, be very sure about it. It's called reasonable cause. We're going to discuss in future. So in a supporting documents, you have to present the documents which make your case strong against the customer. What would be the supporting document? The account opening form of the main account. If she have 5 accounts, each account will have their own account opening form, and each account will have their own bank statement as well, or statement of the account. So you're only going to provide supporting document of the main account, not the allied accounts, other accounts. Not going to provide that. So supporting documents will be about the main account that you have selected, where she's doing suspicious activity at an aggravated level or a high level, or at a larger amount. You're going to provide their account opening form. You're going to provide their bank statement. Okay, how long, if she have an account that she opened in 2009, are you going to provide 13 years of bank statement today? No, you're just going to provide last 2 or 3 years of the bank statement. Your FIU is going to mention that how many years of statement that they need. Or if she have done a suspicious activity in 2011 that you have identified this year, 11 years later, then you will have to, give them 11 years of the suspicious activity. 11 years means that you're going to, if she did this suspicious activity in 2011 and you have identified it today, that is 2022, then you have to provide the bank statement from 2011 to 2022, because she's been doing money laundering since last 11 years and you had no idea about it. You make, right decision at the delayed time, that's still fine. You identified it delayed, but you have reported it now. That's still fine. Okay, and you're going to provide any other documents that you have that makes the case against the customer strong when you're filing a SAR. These are the 2 main ones. You can find any document that your bank have to file it against the customer. So this is in the last page. You're seeing that we're mentioning in account number, you have to provide the customer's details of all the accounts the customer have. You're saying that there are 4 options for each type of information: account opening date, account number, account status. So in the A option, you're going to provide the information of a main account, whatever the account you consider to be suspicious. If this is the account that you're finding it to be the main account, you're going to mention the account number by chair of this account, and the B and C and D, you're going to mention other allied accounts. You're going to say that it's only mentioned the 4 accounts. She have 5 accounts. You can add annexure as well. In the end, if you're in your country, they do not give you enough, space to write the information, you can add annexure. Annexure means additional paper, additional piece of paper that you're adding in the end to give more information about the customer. Okay, you want to mention the allied accounts account number, their date of the opening of the account, their statuses, and the main accounts, and so on. Account status can be active, inactive, dormant, or closed. You're going to provide the purpose of the account, the saving or the business purposes the customer have opened the account, and you can provide some statistical information as well. Sometimes when you're filing the SAR manually, your regulator may or FIU may ask you to give them the data about the customer, like how much turnover the customer have monthly in the previous 3 years. Like you want to add all the debit transactions of the main account and divide it by 36 if you're giving them last 3 years of the data. If you're giving them last 11 years of the data, of this particular account, then you're going to accordingly multiply it by 33 months, for all the debit transaction divided by 33, all the credit transaction divided by 33, and so on. And they want last 3 years of the transactions combined together in the debit transaction, just sum them up, mention this amount here, and sum of them up of the credit transactions amount. So do it for every other account as well. And they want to know what was the peak balance in the last 3 years. This is how they identify if you're a big fish or a small fish, a big money launderer or small money launderers. So your bank statement have date, description, debit, credit, balance, and the balance they want to know what was the highest balance this person have in the last 3 years. So you can mention that as well if they want you to have this information. FIU requires you to share this information. I'm going to mention the nature of the account if she is an individual, an entity. You're going to mention the type of transaction she have done. This is not the transaction that are suspicious. We have already mentioned suspicious transaction previously. If they want mode of transaction, they just want that what is the frequent mode of transaction that she used to perform in her main account that may not be suspicious. If she's using cash transactions, clearing transactions, inward remittance, outward remittances, pay order, or money order, or using credit card or debit card, or depositing the cash, or online transfer, letter of credit, or any documentary credit or transfers, or receiving interest from the fixed deposits, and so on. You're going to mention that mean of or mode of transaction that she will be performing in the last 3 years in her main account. When the customers have multiple accounts, you identify a main account which you report the data about and documents about, supporting documents about. Keep the other account allied or linked. Okay. Lastly, Gurbani, please wait and let me complete this thing and I'm going to take your question. So lastly, you're going to provide what information you're providing: account opening form, KYC information of the customer, any other relating document that makes the case against the customer strong. Provide those documents. And if you were not able to provide any information in any other page previously, in the page 1, 2, or 3, they gave you a space where you can provide any information you want to share this information right here. Who's going to sign and seal it? We mentioned that your compliance officer is going to be discussing this matter with the AML analyst. AML analyst is going to, investigate the customer and draft and file the SAR. But the decision to decide which case to file the SAR is going to be decided by the compliance officer. The compliance officer who is contact for assistance, because this is the person who's evaluating the cases, determining on which cases SAR need to be filed. But the SAR will be signed and approved ultimately by the chief compliance officer, because the chief compliance officer's sign and signature will be there in every SAR. This person have delegated the responsibility to the compliance of, okay, this person is in his 50s or 60s. This guy have 30, 40 years of banking experience. But this person is not going to review every cases or deciding whether to file a SAR. They have bigger things to, to deal with. So this person is going to delegate the responsibility to the compliance officer. Compliance officer is going to determine on which cases to file a SAR. But when the SAR have been decided to be filed against a particular customer, the chief compliance officer is just going to sign it and seal it, and then the SAR will be reported to the FIU. Either the same AML analyst who have reviewed the SAR, drafted the SAR, will be filing the SAR as well, or your bank can have a separate team whose responsibility is just to file a SAR. In some banks, the AML analyst investigated, draft it, and have it discussed with the boss, with the compliance officer, and try to convince the compliance officer. Same AML analyst going to say that I want to convince you, boss, that we need to file a SAR on this case. I feel this is the right decision and the right time we are making. And if the compliance officer decides to file a SAR, either the same AML analyst will file a SAR, or the separate team in your bank will be filing the SAR against the customer. Okay, if the compliance officer decides not to file a SAR, either the case will be about a customer who have justified the reason, saying that I'm not doing anything suspicious, you think I'm suspicious, but I'm justifying you that I'm not doing anything suspicious, or your compliance officer say that there's no need to file a SAR, the customer have done the transaction at a smaller scale, or customer have done it only once, let's wait it out. If the customer is going to do it again, then we're going to file a SAR. In this case, you are opting towards close monitoring of the customer. That's called SAR filing. We are filing the SAR manually. You can file the SAR automatically as well. We're going to discuss this in a bit. I'm going to take your questions. Since the last time we discussed anything, whatever we have discussed so far, other than the predicate offense or the criminal environmental crime or whatever we have covered so far in the last 3 hours, I'm going to take your questions, because in the next hour, things are going to get more complicated. I want to resolve your queries if you have any questions. Gurbani, please go ahead.
Yes, so my question is related to point 50 of the form. You mentioned about the account numbers that are affected. So the B and C and other parts
accounts.
refer to the accounts, or on the accounts where the activity was
all accounts.
The
all accounts. Doesn't matter
activity.
if she has done any suspicious activity at all. You're mentioning that she, Gubani, have these accounts with our bank. These are the statuses of the account, and so on. So you're gonna in the brief narration, you're gonna mention that why you think the customer is doing suspicious. You're gonna mention the both accounts, that she's laundered the money in this account and also use this account as well. But they want you to decide which account is a main account, so that you can provide their transactions and their supporting document. The other accounts that you're reporting, you're letting the FIU know about it, that she have other accounts in our bank as well, where she may or may not be doing suspicious activity. So you're disclosing the whole relationship with the FIU about your customer. They want everything.
Great. All right,
Okay.
got it. Thank you.
Okay, so let's take some questions. So Joseph is asking on a chat, when a customer decides to close the relationship after filing the SAR, can the customer never be onboarded again with the bank? Okay, that's a really good question. Sometimes your bank have something called negative list or SAR list, where the bank is going to say that, it's a bit inappropriate way to say it, but hopefully you understand. It says that F me once, shame on you, and F me twice, shame on me. So if your bank is still letting someone to open another account, the customer who have done something suspicious, and you have reported the customer on SAR and already closed the account, that bank is being this. That's shame on your bank, that if your bank is letting someone open another account, if the customer have done something suspicious, you should not be letting customer open another account. Okay, next one is, what is the treatment to her family account members? That's not depends. If she's doing something suspicious with her, if the involved parties were her family members, then you may decide to do something against them as well. But if they were not involved in her suspicious activity, you're not going to do anything. It's not like a politically exposed person. When one person is politically exposed person, the close associate, the family members are also, or spouses are PEP. That's not the case in this situation. If they are involved as an involved party, then we're going to do something about it. Okay, part number C, part number 2, we're saying, does bank reveal to the customer about the SAR filing? Brother, I just mentioned that it's going to result in tipping off. If you want to go to jail, you can reveal this information. If you do not want to go to jail, please do not mention any information of the customer that you have filed a SAR on them. Okay, I'm going to take a question. Jyoti, please go ahead. Jyoti Sharma. I'm going to come back to the chat,
Sharma.
please.
So I just want to check if we are closing the account, then so for example, if we are closing the account, is
you're talking about the funds, right?
Which is being
funds in the account?
No.
Okay.
The account basically. So is there any action which is being taken on the client or entity?
I didn't understand. What action are you meaning? Are you, when you're closing the account, what other action can you do?
So for example, I mean, penalties, fines, or maybe
banks do not do that. No. Okay. Let's if you want a clarity, banks file SAR to FIU, and then FIU refer those SAR to LEA. LEA then investigate the customer. Like, they refer the SAR to FBI. FBI then investigate the customer, and then they work with the public prosecutor to make a very strong case against the person, and then the person is prosecuted in front of a judge or a jury in a court of law. So if you're referring to any fines and penalties or any sanctions on the person, that is the responsibility of a judge and a jury in a court of law. It's not our responsibility. That may help in future. Court of law. We do not impose any fines and penalties, or any regulator do not impose fines and penalties. Banks just file SAR to FIU. FIU then refer the matter to LEA. LEA works with the public prosecutor investigating and then prosecute this person in a court of law. This person is going to hire Gurbani is going to hire her own lawyer, and the government have their own public prosecutor. The case will be presented in front of a judge or jury, and the jury is going to then give a verdict, where we discuss about declaring someone a money launderer. So judge and jury is going to give a verdict to send the person to jail or having to pay fines and penalties and so on. And also, investigate the person in detail to find out if the person did money laundering by earning something illegal activities or not, to investigate the whole crime. It's not our job. Okay. Yeah.
I have another question.
Please.
Yeah. So, for example, you mentioned that we'll be filing supplementary
SAR
filings.
Yeah.
So, you also mentioned that sometimes we prefer, the compliance officer will ask us to monitor the client instead of filing the SAR or instead of closing their account.
Yeah.
So in that scenario, if we again find out that maybe they are doing some transactions, so we will be doing a initial filing, initial SAR or supplementary?
Initial SAR. If you opted towards close monitoring, didn't file a SAR, and in few months later she continued to do suspicious activity, then you're going to be filing initial SAR on her. Initial SAR is a simple concept. If you are filing for the first time a SAR on a customer, that would be the initial SAR. And afterwards, every time you're going to file it, that will be your supplementary SAR. Okay. And we file a SAR on a customer. We always investigate the customer, file the SAR on a customer, not an account. If you're going to say that I file a SAR on an account and then I file a SAR on another account of the customer, that means you're filing supplementary SAR if you've decided to file a SAR on another account. We file a SAR on a customer. So customers include every other account. You're going to file the SAR on another account of the customer, that would be a supplementary SAR. Okay, not an initial SAR of a new account. We always investigate the customer, the whole customer, and we file the SAR on the customer as well, not on an account. Okay, thank you. Okay, next one, Damilula, please go ahead.
So I was going to ask you to please explain what the concept of the corrected SAR.
Corrected SAR means that you made some mistakes. Let's suppose when you were writing KYC information, you use wrong name or wrong spelling of the name, or you mention something in a brief narration or anywhere where you mention wrong thing that unintentionally, and then you are correcting it. Corrected means that you make an unintentional mistake, not an intentional one, unintentional mistake, which you are identifying yourself and having corrected yourself by doing it voluntarily, or where you file a SAR to FIU, when they were reviewing or analyzing the SAR, they found your mistakes and they want you to file it again by discarding or rejecting your SAR and saying it, file it again by correcting it, making some amendments. So that's corrected. Okay, next, some questions on chat. Okay, next one is Nalini. Can a SAR be filed based on a whistleblower? Yes, we're going to be discussing this whistleblower and regulatory recommendations. If she's asking, that means she have started chapter number 4. These are the 7 triggers that we're going to discuss, that how someone's suspicions have been identified, which result in investigating the customer and so on. One of them is whistleblowing. Your bank should have a whistleblowing policy. Okay, how long can a bank hold records for a customer? That's called record retention requirement. We're going to be discussing this record retention requirement in Basel committee when we're discussing chapter number 2. You're going to find out how your requirements are. Okay, next one. Shoya, can after identifying the suspicious activity within the duration of need to file? So that's a really good question. I don't want to answer this. We're going to be discussing in chapter number in session number 4. This is called a specific number of days from forming a suspicion to filing a SAR. we're gonna discuss the words called promptly filing, immediately filing, as soon as possible filing, or your FIU is going to determine you what are the number of days that are available to you before when you make a decision and when you file a SAR, how many days that are available. There's a training session that I'm going to explain you in detail by relating to a different topic, session number 4. The next one, are there any consequences of filing a SAR incorrect? Okay, this is the next topic, false positive SAR. I have 1 hour remaining. I'm going to spend in discussing what's going to happen when you're filing false positive SAR on customers in a technical way. The next one is, if compliance officer fails to report SAR, then board of directors, that's good question. So who is responsible for when a compliance officer decides not to file a SAR or make a decision of willful blindness? So if AML analyst recommended the SAR, but the compliance officer did not approve it, where the compliance officer should have approved it, who is responsible? Compliance officer is responsible, chief compliance officer is responsible, board of director who hired the chief compliance officer who hired the compliance officer. All three of them are responsible. Who is not responsible? The AML analyst who made his the right decision to draft the SAR and have it discussed with the compliance officer. How are you going to discuss it? You're going to email to your boss saying, the boss, this is a SAR that we should be filing it. I have emailed to you. I want to discuss with you. So if the AML analyst have it in his or her records that the SAR need to be filed, but that this guy or this person decided not to file it, then they are responsible for that, because board of directors are ultimately responsible. They hired this person, and this person hired this person, and this person hired this person. But this person did his or her job. This person is not responsible. This person are responsible. Okay, let's suppose if you said the compliance officer actually approved the SAR, but chief compliance officer did not willingly sign the SAR. The last page of signing and sealing. The chief compliance officer didn't bother signing the SAR. So who is responsible? Chief compliance officer is responsible, board of directors are responsible. They who are ultimately responsible, and also they are the one who hired this person. This person did his due diligence in reporting to and approving the SAR, but the chief compliance officer did not, sign the SAR or seal the SAR. These two are not responsible. They are the ones responsible. But everything needs to be expressively written in your bank. If you want to avoid the burden of proof, or you want to avoid any liability, you have to make sure that you are writing everything down, so that in future you're going to say that, show the email that I refer the case to my boss refer the case in email and send it to the chief compliance officer for the approval, for the ultimate signing and sealing. The chief compliance or the matter was delayed or pending at the end of the chief compliance officer. That's resulted in be unable to file a SAR. On certain cases, the willful blindness issue will be on this person, and the person who hired this person will be the board of directors. They are the ones responsible for that. Everything needs to be written so that you can justify your case that you are not liable for that. These two persons should have everything written in email. Okay, next one, Sama, please go ahead.
Hi, so my question is similar to Rahul's question. If let's say the bank has already filed SAR close to 6 times, so they have closed the account. So will the customer not sue the bank, because we're not even giving the information as to why the account has been closed?
You're gonna make something up. Bank, when you're opening an account, there is terms and conditions written in a very small font that no one bothers to read. And in those terms and conditions, banks give themselves lots of powers where they can close your account without giving you the reason, or close the account with any reason they find to be suspicious. So they're going to close your account. They're going to issue you the pay order, whatever the funds that are available in your banking account. They're going to say that take your funds. They're not going to give you cash. They're going to give you pay order or money order. And it's going to say that take your fund, go to another bank. We are not, your business is not, it's not welcome here anymore. So we do not want to maintain your relationship with you. Either we are closing all your accounts, or we are closing that one particular account and giving you the pay order and saying that, by not giving you actual reason, and making something up. Because if you're going to give them the actual reason, that means that you are tipping off the customer. and they give themselves lots of reasons in the terms and conditions where they can make something up without giving you the actual reason why they're closing your account. If they gave you the actual reason, it means that they're tipping off. That's unlawful.
Oh, okay. Got it. But I was going through the chapter. I went through the chapter number 4, wherein you also mentioned that
I'm not.
Citibank
No,
has to
I'm not
keep.
going to discuss chapter. We have a training session, chapter number 4 or 3 to discuss. Please ask your
No,
question on
what we
30th.
discussed
Yeah.
yesterday. I think
Uh,
I mentioned incorrectly, but something that you mentioned yesterday, that
was
Citibank had to keep all the recordings and all. All right, no worries. I'll ask it later. No worries. Thank you.
record retention requirement is on chapter number 2 on the Basel committee, keeping all the records.
Okay.
That's where we're gonna discuss. Okay. Anyway, so next one.
Okay.
Yeah. Next one is okay. Rahul's question is answered again. Amit, who identified the willful blindness? That's okay. That's a good question. That another way of saying is who can challenge your decision? You made a decision not to file a SAR. So who can challenge your decision? Your decision can be challenged by two parties, internal and external. They call stakeholders. Stakeholders mean those who are interested in knowing that what you're doing in your compliance department. So internal stakeholder and the external one. Internal stakeholders are your QA team, quality assurance, and your internal auditors. They are the one who's gonna review your decision making on in which cases you are filing the SAR, in which cases you are not filing the SAR. They do these ones. They do not fine and penalize you. These things, they are your employees, your colleagues. They just issue a report and then you make rectification based on their report. And where they say that you should have filed a SAR, then you're going to file the SAR if they find a genuine reason for you to file the SAR. The external ones are the ones which are a bit tricky, where your regulator is identifying the regulatory inspection, your regulator or your law enforcement agencies are identifying it, or your FIU is identifying it, or in an extreme case, your judge or a jury is identifying it that you didn't file a SAR in the particular case, you should have filed a SAR. These are the situation. If any of these parties identified it themselves, then it's going to result in imprisonment, jail time, or something. But if someone within your bank identifies it, you can rectify it right away and file a SAR right away. But this is the one we're trying to save ourselves so that these people are unable to identify. We identify ourselves. That's why you have your internal controls and internal auditors to identify your mistakes. If they didn't, then these are that's gonna result in severe punishment. Okay, next one. Jyoti, when do we send RFI before this? We send it before our request for information before filing a SAR. But I want to discuss in detail how SAR is being RFI is being filed in session number 4 when we're investigating a customer theoretically. Okay, last one. When we find suspicious activity, we will go for RFI to know the reason behind that particular activity. The customer provide logical reason behind it, and then we go further investigating. That's up to the AML analyst to go for further investigation or RFI. I want to explain it again in session number 4 in detail. What's the reason? I'm just giving you a brief review how you're supposed to manage the risk. We're going to go into details, more multiple factors in future training sessions, certain aspects of it. Okay, so this was SAR filing manually. But when you in your country, you have a form to fill and then print out the form, print out the supporting document, courier it to your FIU, or if your FIU wants a soft copy, then you're going to have them scanned and email to the FIU. But if the FIU is going to give you a tool, so there are tools which are called RegTech, regulatory technology, or SoupTech, supervisory technology. Technology. Okay. This is not. This is RegTech. And this is SoupTech. Two type of tools obliged entities supposedly need to use. Regulatory technology is the tool recommended by the regulator to oblige entities. Okay. So it's a bit confusing. You're going to say that if it's recommended by the regulator, are the regulator going to mention the names to us? No, regulator is going to say that no, we are not mentioning any brand name or any vendor's name or anything. We're saying that you need to have a tool to do these activities. Like a regulator is going to mention that your bank need to have an automated tool to generate alerts on suspicious activity, and also sanction screening tool to generate hits on the whenever there is a match against the sanctions list. So that's called RegTech, when your bank need to buy a tool from a vendor where your regulator have recommended for the bank to have this tool to perform these activities. What is supervisory tech? This is a tool provided by the regulator to oblige entities. Regulator is saying that you do not need to buy this, we're going to buy it for you, and you have to use this. Use this how? Use this for regulatory reporting. SAR filing is part of your regulatory reporting process. Both of this, either you filing STR or SAR, is a regulatory requirement for you to do it. It's regulatory reporting requirement. Okay, so if your regulator is going to give you a tool to use for regulatory requirement purposes, that tool is called SupTech, supervisory technology. Your regulator is your supervisor as well. Okay, so GoML is one of those. So GoML is introduced by United Nations Office of Drugs and Control, United Nations. So they developed this tool and they have it available to FIUs around the world. FIUs around the world. FIUs, like in some countries, FIU is part of your regulatory body, something like that. So your FIU is going to buy the tool and have it available to all the obliged entities to use it in filing the SAR. So this is the tool. FIUs are using it. United Nations have introduced it. Zimbabwe, I'm using their website. So just trying to identify which countries are using to let you know. Zimbabwe is using, New Zealand is using it, Nepal is using it, and their FIUs are using whatever the website name you're saying that this is their FIUs website. Ministry of Economy is using this thing in United Arab Emirates. Nigeria is using it. Indonesia, Cyprus, Uganda. What is K? Not sure what is K is. Mauritius is using it, and this is again UAE one. And in Namibia, Ireland is using it. And Tanzania, okay, let's open the Ireland one. Okay, no, let's open the Mauritius one. Where is Mauritius? I forget. Just open the Ireland one. And Tanzania is using it, and don't know what this one is, and so on. Lots of FIUs around the world, they are using this tool that is provided by United Nations to file the SAR. That was the issue. No, I should not have. Let's find the Mauritius one that is easier to open. Let's open this one. Yeah, this is opening. Okay, so I want to give you this walkthrough to learn if in your country they are not using it, you still get exposure. Since we are discussing best practice, we're not concerned about how things are done in your country or in your bank. We want to discuss how things are supposedly to be done in the best way possible. So countries around the world, their FIU have been working with United Nations to buy the tool and then use this tool for reporting purposes. This is a user guide of Irish FIU. They made it last year for their banks within the Ireland. A walkthrough or user guide for them how to use this GoML. This is how it looks like. This is a production environment. Let's go for. You want to register as an organization and start filing. This user interface is the same for every FIU because they're buying it from United Nations. And you're going to see the screenshot the same way. This is going to be a screenshot, GoML. You make an account there. If you want to, they're saying that how you can make an account to Irish banks. They're saying the forget password, the conventional way how we make an account. So register as an organization, and then you're going to see that this screenshot, the same screenshot right here. I'm not going to click on it because otherwise the Google form is going to fill in my personal information. But this is how you make an account and upload the information about your bank and so on. So FIU of Mauritius and so on. we're going to skip the part how to make an account there. So your bank is going to make an account. Then account has been made. It's going to show right here the name of your bank and account has been made. So how are you going to file the SAR automatically using a GoML? Lots of countries are using it, so you need to learn about it. If your country is not using it, eventually your country will be forced into using this as well. So you're going to click on this. It's going to new report. New report will show you that are you filing SAR on the customer or you're filing CTR on the customer. You're going to select that I'm filing SAR or STR on the customer on a new report, and then it's going to give you a unique reference number of a particular STR or SAR that you're filing. Name of your bank. So the page 1 that we used is going to be automatically be filled for every SAR. You do not need to give a name of your bank and name of your compliance officer or chief compliance officer, because it's going to be automatically filled. When you made an account, it's going to be automatically filled. But of course, you're going to have to give a branch code separately wherever the customer have the account in a particular branch. Okay, this is how the user interface looks like. You're going to provide right here reason for suspicion. Why you think someone is doing money laundering? Reason for suspicion. It used to be called brief narration, but now it's called reason for suspicion. Okay. Next, I'm going to also forward you this document as well. You can read this document for your whenever you have the time for it. Okay, where is this document? User guide. Yeah, this one. So then you're going to provide the reporting person information. Okay, I'm sorry. I messed up. I was confused. This is called reporting person, the person whom we are reporting on a SAR, and the reported person is your company or the bank. Bank name is called reported person. Reporting person is the suspect against whom we are filing a SAR. So in her case, we're going to file Gurbani's full name, her date of birth, her government identity card, issued identity card number, and all the KYC information that we want to put here against her location, her addresses, and so on. In indicators, we're going to put the typology. When we're filing the SAR, you have to define that which type of money laundering, terrorist financing, or predicate offense she's doing. Mention that it can be a drop-down option. If you are selecting this thing is going to show you drop-down option which you can select. And we're going to discuss this more about it in 4th training session. Your country's FIU is going to define that what are the typologies someone can do money laundering in your country. And transaction, suspicious transaction, which you're going to define here. Select here, sorry. So this saying in the next screenshot, how you can save the documents or attachments. We all have done this, that you can attach PDF copies, Word copies, XLS formats, CSV formats, and so on. So just skip this part. We want to discuss the part where they are adding transactions right here. So you can add the transaction on the face, or you can add the transaction in detail. If there are involved parties, if Gurbani is working with someone who have an account in your bank, you're going to mention these involved parties there. You're going to mention what type of transactions you're doing, the transaction reference number, each transaction, the amount of the transaction, the date of the transaction, and so on in detail. If you do not want to give the detail, just mention in the face. If you want to give detail, just click the edit button and give further details of each transaction. And the benefit of this is by filing automatically is that you can give as many transaction as possible. There's no space available. Add any transaction you want to. Okay, let's suppose all the transactions have been added. You can delete a transaction. That's easy. All of us have used a software before. So the next one, this is the very important one. This is where your 4I principle is going to come in. So someone who's going to draft the SAR. Who's going to draft the SAR? The same person who investigated the customer is also going to decide that I want to file a SAR on this customer. But he can't, or he or she, the AML analyst cannot decide himself to file a SAR because of the KPI, Key Performance Index. This is what we're going to discuss, false positive SAR, in a bit. Let me explain the GoML, then I'm going to explain what's going to happen in that situation. So someone is going to draft the SAR. So that person's name will be right here, created by AML Analyst, the name of that person, created at this date, and this is the SAR reference number. And the person who's going to be submitting it, or person who's going to be updating it, most probably the person who is approving it. If you want to have a 4i principle, someone is going to create it, someone is going to approve it. So who's going to approve it? This compliance officer who's going to log in with his ID and approve the SAR. That person will be the person who's going to be last updating the one, his or her user ID is going to show that, and the person who's going to submit it is going to be the separate ID for that. If you have a separate team for that, they're going to be doing it, or there's the person who's submitting it is most probably the same person who basically created it as well, who's lastly going to submit it. And it's going to show that by the date of the submission and so on. Someone, one of you were asking that the forming a suspicion to filing the SAR date. This should be, we're going to discuss in the 4th training session that you're going to find out what should be the difference between the two dates. It's going to show you that the transaction that you have attached and the documents that you have attached. If you want to preview it, it's going to be previewed this way. Show it this way. The name of your bank, the person who you were reported on SAR, the transactions that you have reported on SAR, and so on. This was the 19-page user guide on how to use the SAR by the Ireland FIU to the FIUs in in Ireland, that they made it last year in 2021 to start using the SAR, because the Irish FIU bought or acquired this tool from the United Nations, and they told every obliged entity to start using their SAR, this thing in their country. So what is more beneficial, manual or automatic? I've done both in my country. We used to do this for a few years ago. Manual is a pain in the so that's like takes 1 hour or more to do it. That's very wasteful time, very laborious work. Because having it printing out, having it then approved, having it sign and seal, and then having this scan and then email. So it takes the whole hour or so to do it. Automatically, this can be done within 15 minutes. Very easy to do. So that's why we are moving towards doing things, automizing certain tasks. So moving towards doing things automatically. If your country do not have it, it will eventually be forced into having this tool in future. So you just prepare yourself, or if you move to a better country where they're using this thing, then you will have the some knowledge about it, which will help you to get a job in that particular country. So, okay, that's your GoML. Now we want to discuss KPI. Someone was asking that what's a false positive SAR or incorrect SAR? That if someone is filing a SAR with any Tom, Dick, and Harry sort of cases, what's going to happen? Okay, let's take a case. Let's give someone a name. Let's go for Jyoti. So let's suppose she is a AML analyst in our bank. So okay, let's explain it here. In last appraisal cycle, let's suppose this guy and her, they were in the same bank, both AML analysts, competitors, colleagues, but competitors. This guy in last appraisal cycle filed 150 SARs. When you're filing 150 SAR means you're identifying 150 money launderers and terrorist financiers in your bank and reporting it. She filed 400 SARs in year 2021. By the looks of it, in the appraisal cycle, she should be rewarded more, and this guy should be rewarded less. Makes sense? Well, this is your job. This is your KPI that you are supposed to investigate the customer, identify who are doing money laundering and report them and so on. So this guy is lazy. She's hardworking. She'll be rewarded more. So what this guy is going to do in the next appraisal cycle in year 2022, in order to compete with her, this guy is going to identify Tom, Dick, and Harry sort of cases and start filing SAR, saying that on every small suspicion. If he have we just discussed, your key performance index is based on how many SARs you identify, and you will be rewarded based on that. So this guy is going to try to compete his competitor with her and try to find reasons. Since he's lazy person, he's not working hard. He's just looking for any small suspicion and trying to refer these cases to the boss and asking the boss, I have a really good case. and you're going to be surprised that we are filing the SAR on this case and so on. He's just buttering the boss, that boss, please file the SAR on this case. So if this person is going to start finding out reasons to file SAR on small suspicion, not bothered to contact customer like Sama and ask her that why you have received that $5,000 or $500 from a guy named John, not bothered to perform RFI, just straightforward filing a SAR. If this guy would have, contacted her, she would have justified the reason, saying that John is my brother, $5,000 I received as a loan. I spent this amount to buy a furniture. These are the receipts of the furniture, and I have justified you. This is not a suspicion. I have justified you why I have received the funds. If this guy was hardworking enough, he should have contacted the customer and asked for the reason. But he's lazy person, starts recommending SARs on small suspicions. If he's able to butter up the boss, that's going to result in filing false positive SARs. False positive SARs are the ones which are filed on cases which they should not have been filed, but they have been filed. You're going to say that what's going to happen with them, where we are pronouncing someone to be money launderers, where those persons are not money launderers. Simple answer, nothing is going to happen against you. That's the benefit of giving you immunity. On cases where you're making mistakes on reporting them, nothing is going to happen, but there is a small consequence that we're going to discuss in a bit. But if this guy somehow able to convince the boss on filing SARs and she, working hard, 10% increment next year, and this guy somehow able to convince the boss, you saw that throughout the 2022 year, I filed 500 SARs. I came to you so many times and we approved the SAR. I was able to convince you on file the SARs in these situations. The boss is going to say that yes, you should be rewarded more, and she should be now rewarded less. But she's the one that filed a SAR on true cases, true SARs. That was the reason where someone was actually doing money laundering. This guy was really good at interpersonal skills and buttering up people and used the office politics the right way. And she wasn't rewarded the way she should be rewarded. This guy was somehow rewarded for that. Okay, in your bank, there should be a check and balance. If you give your AML analyst the authority to file SAR themselves and approve the SAR themselves, they will start filing the SAR on small suspicion. If you give them their KPI, that every AML analyst have the right to approve and file SAR on their own, what the AML analyst will start doing, or they'll start filing SAR on every Tom, Dick, and Harry case. That should not be there. That's why you have an experienced person right there who's going to determine on which cases we should be filing the SAR, on which cases we should not be filing the SAR. So you are filing true SARs, not false positive SAR. Okay, what's happened when you file false positive SAR? Your FIU have a card to play. They play their card, which they issue something called naming and shaming report. When FIUs receive the SAR, they analyze the SARs from different banks, and after analyzation, they make a report. In this report, they determine, let's suppose, Citibank, Bank of America, Chase Bank, HSBC Bank. They say that HSBC Bank filed overall 11% of the SARs to be false positive SAR. They should not have filed SAR on this case, but they did file. Because how did we FIU identified it? Because they said that when we reviewed it, we found the suspicion not significant enough, strong enough to be filing the SAR. Chase Bank, let's suppose, did 13%. Bank of America did, let's suppose, 17%. And your Citibank did 19%. That's your bank being named and shamed overall. FIU cannot reveal how many SARs your bank have filed in a single financial year. They can't reveal that. That's a very confidential information. But they can show statistics where overall how many SARs which they think are false positive SARs. That's gonna affect your reputation. Why? Because your board of directors are gonna review this report, and they're gonna say they're gonna ask Chief Compliance Officer come to our meeting next time when we're having, and we want to discuss few things, how compliance department is, their performance and so on. And in this performance review, the chief compliance officer will be shown this report. Of course, chief compliance officer have already read the report, is publicly available. The chief compliance officer is going to say that justify this reason when you came to us asking for more money, $40 million, and then we gave you the more money, we were expecting to have improve our controls so that we can manage the risk the right way, and it's showing us that our bank have digressed. Our bank compliance department have started performing less from the last year. They do this year-wise. Some studies, this is year 2022, year 2021. Let's suppose they did it 13%. False SARS previous year, this was, let's say, 11%. This was 11, 9%, 7%. This was 5%, so on. So this board of directors gonna say that asking for more money, and this is what you are showing the results, that we have filed false positive SARS on cases we were expecting you to file more SARS, more true SARS, by hiring more people as a skillful staff, by buying more expensive tool and so on. We were expecting you to make improvement. We're not seeing any positive improvement. This is a negative improvement. So how can you justify asking for more money? It means that you're not spending our budget on a cost center where you're working in the right way. We feel that we need to fire you and find someone else who can deal with the compliance department the right way, in an efficient way, so that we are filing more true SARS, less false positive SARS. So this is what the card, the FIU have to discourage obliged entities to not to file false positive SARS, because this results in wasting time of FIU and LEA, and no one wants to have their time wasted by someone else. Okay, there's one aspect of an AML analyst try to butter up the boss because of the KPI. Okay. Lazy people like this guy, convincing boss to please, file SAR on every Tom, Dick, and Harry cases. So what happens when there's a KPI of a compliance officer? Compliance officer have their his or her own KPI. Compliance officer, chief compliance officer. What's their KPI? Okay, we're not discussing key risk index, we're discussing key performance index. So key performance index for the compliance officer is his or her performance in the last few years. This person, let's suppose, join our Citibank in let's say in 2011. Since 11, that's 12, 2013. Okay, let's just make 16. So I don't have to. So 17. Next year was 17, 18, 19, and so in this year, this is the year here, and these are the SARs that have been filed. Number of SARs. When he joined, the budget, let's go for the budget as well, budget of the compliance department. So the budget was started with $5 million per year, and then decreased to, let's say, $7 million per year. And 2019, they gave you $13 million per year. And in 2020, they gave you, let's suppose, $19 million. You had in 2021, $25 million that have been increased to $40 million this year. 17, you filed number of SARs were 300. That increased to 500. That increased to 700. Let's not make a pattern. So that increased to 750, and that's increased to 1300. That have increased to last year that you filed it to be 1900, and we are right now in 15th of December 2022. Let's assume, and our bank have filed so far 650 SARs. Okay, so that's like 16 or 15 days of the year is remaining, and the progress so far by increasing, taking more budget, like there will be a psychological pressure on compliance officer and the chief compliance officer to identify more money launderers and terrorist financiers from the previous year. If you're going to ask more money, we expect more performance. Simple cost versus benefit analysis. So board of directors saying that you're not generating single penny of money for us. You're working as a call center, consuming all our some of our profits. So we want performance. We want results. So if their performance is to be reviewed, the chief compliance officer, compliance officer performance to be reviewed by the board of directors, earlier next year, they're going to check that this they didn't even meet the previous years of SARS target, and they have 16 days remaining. So what they're going to do, that compliance officer, chief compliance officer, in order to achieve the KPI. What is a KPI? The psychological KPI of compliance officer and chief compliance officer is to at least meet the previous year's target and do a bit more. So what they're going to do, they're going to start filing between 16th of December to 31st of December. He's going to call a meeting, or he or she, whoever is gonna, that person is going to call the meeting to all the AML analysts and ask them, we have 16 days. I want you to file SAR on every small suspicion. I'm available. Come to my office. Whatever the case you feel, there's a SAR need to be filed. I'm approving all the cases today and in the next 16 days. So they will start filing the SAR, lots of SARs, and in those 16 days, that will result in filing 1,950 SARs. Previous year's target is achieved, and a bit more SARs have been filed, so that you can justify that the more budget that were given to you, the bonuses that will be given to this guy, the bonuses that are expected of the AML analysts and so on from the previous years of salary, the increment in the salary of 10% or 5%, and the bonuses increment as well, and promotions that are due as well, that only be justified in the compliance department when the compliance department KPI index is met, key performance index is met, when they have identified more SARs from the previous year's target. It's not written anywhere. It's expected of you by the board of directors. If they are giving you more money, they will expect you to file more SAR. But you're going to say that, in an ideal situation, we should be organically identifying SARs, identifying customers. We should not be looking for any targets. This is a very, you're living in a cuckoo world if you're thinking that that's going to happen. We are living in a materialistic world. If they give you more money, they expect more results from you. And if you're going to show that we are only file 650 SARs and in 16 days we can file at maximum more 100 SARs as at most, that's you basically filing 750 SARs, not even achieving the half of the previous year's target. So every bank have a psychological pressure to achieving previous year goals. And if this guy want more salary from his boss or his or her boss, and this boss want more salary from those owners, how they're going to justify it? They're going to justify it the same way the analyst justified it. When Usama, the lazy person, went to the compliance officer, boss, I filed 500 SAR this year. I'm expecting, for you to give me more bonus this year. This guy's going to say, yes, it's justified. You're 500 SAR, so I'm going to give you this more than what you have filed it to be, more than your colleague. So I'm going to give you more. This guy is also expecting to his boss, I have approved more SARs, 1,950 SARs this year. I'm expecting more salary increment and promotion from you. The boss is going to say, yes, this is justifiable. I'm going to go to the board of directors. To the board of directors, the chief compliance officer is going to say that this is the performance of my compliance department. We have filed this many SARs. We have reduced our naming and shaming report. Where is naming and shaming? Yeah. So in this year, let's suppose it's from 13%. It's been reduced to, let's suppose, to 11%. So we are showing you performance, showing you the progress, and expecting you to please give more budget to us. Board of directors going to say that, okay, that's justifiable. You have filed more SARs. Your performance is much better this year, and you're not being highlighted in the naming and shaming report of the FIU as well. So we will give you more budget to the next year in year 2023. So you will be given, let's suppose, $50 million for that. And how this guy is going to spend $50 million? Majority of it, going for his salary and his bonuses. Rest of it is going to the compliance department. What are the peanuts of this budget is left is going to the AML analysts, salaries and bonuses on. Chunk of it, this guy is going to get it. The rest of it is this guy, and some of it for this guy, this people who's going to get it. That's how politics work. So the budget is basically everyone is concerned about their own, or their own bag. So that's result in sometimes your bank filing so many false positive SARS, and which is not a good thing, but there are no negative consequences other than naming and shaming, because you have the immunity available. Sometimes this immunity is misused by the AML analysts and compliance officers. Nothing is going to happen against you if a SAR has been filed against you, against a customer. Just make sure you're not tipping off the customer. If you're filing wrong SARs or false positive SARs, just do not let the customer know about it. Do not let her know about it, who is just receiving $500 from a guy named John, most probably her brother or something like that. So if you're tipping off, she can't file a lawsuit against you, but you will be sent to jail if she came to know that. If she go to any court of law saying that I came to know someone file a SAR, and the judge is going to ask that did your bank actually file a SAR against her, your bank is going to find the person who tipped her off. Not going to do anything against the AML analyst or chief compliance officer or whatever, but they're going to do something about it against the person who tipped her off and send them to jail and blacklist that person. That person can be a AML analyst, chief compliance officer. If it's not, then any other employee of the bank will be sent to jail for tipping off this very confidential information. So your SAR data, whatever the data that you're maintaining in the SAR, this SAR data in the bank is very confidential. No Tom, Dick, and Harry sort of employee should have the access to it. Who have the access to it? The access to this data is available to the compliance department only. Who wants to know when they're filing the SAR? Are they filing the SAR, initial SAR on a customer, or they're filing a supplementary SAR on the customer, and so on? They want to have the access to it, so on. Okay, you're gonna say that if what about the other department asking some information? Let's suppose credit risk department is saying that we are about to approve the loan request of this customer. We just want to know yes or no. They have our bank ever filed a SAR on this customer or not? Just please give us have our bank ever filed a SAR on this customer? Just let us know, because if our bank have filed a SAR on this customer, we are not going to issue the loan. If our bank have not, then we may decide to issue the loan. Just give us yes or no. So this yes or no can also result in tipping off. Someone in the bank, in the compliance department, is going to take a risk to share this information with the other department. Who's going to that be? Your chief compliance officer is going to receive this email from the senior management of the risk department, credit risk department. Chief compliance officer is going to take a risk of approving the request to share the information, and then the request will be shared, information will be shared, but the burden of tipping off in the compliance department will be on the chief compliance officer who gave the request, approved the request of sharing this information with the other department of the bank of yes or no. We generally just share yes or no, and this yes or no is sometimes very crucial as well. If just she came to know yes, that a SAR have been filed, she can get pissed off saying that just the $500 or $5,000 receiving from my brother resulted in me being reported to the FIU of my country and being reported to the FBI of my country. That's not a good thing. Some people are, just get mad over this thing. Nothing is going to happen against you. A SAR has been filed. Majority of the SARs are just for record purposes in the FIU. You're not being sent to jail because they do not have the resources to investigate and prosecute all the SARs that have been filed. Only 1% or less than 1% result in being prosecution. But some people just have some free time, or some people have just get pissed off on small things. And if she finds out about it, that she's been reported on $500 being received from the brother and being reported on SAR, she may, decide to prosecute in a court of law. The judge is going to ask that, did the bank file a SAR? The bank said yes. The judge is going to ask who, gave this information to her. She's going to reveal that this person basically gave me the information, and that person is going to jail, basically. Okay, so that's your SAR data, very confidential data, not to be shared with anyone else outside of the compliance department. If it's been, someone is taking a risk. Okay, questions? Any questions? We discussed whatever so far in the last 3 hours.
Yes, I have a question.
Please,
So, for
Jyoti,
example,
sister, you gotta raise the hand, please. Okay, I'm gonna tolerate with Gurbani. She's volunteering. You have to next time, please raise an hand. You can ask the question, please. Next time, raise the hand. Go ahead. Yeah, Jyoti, go ahead.
okay. So my question is, do we get to know that whether the SAR filed by us is a true SAR?
No,
To
no. The FIU is not gonna send you respond. You're not expecting feedback from the FIU that which SARs they found to be true or false. You're not gonna. They do not give feedback after the analysis. You just make a report of generalizing that how much percentage of it turn out to be false, positive, and so on. This is too much if you're asking them to give you feedback on each SAR.
Okay. So if we haven't closed the account of the customer and we have filed the SAR, so if it is a true hit, then how do we get to know whether we have to close the account or not?
The experience of compliance officer is going to come into the situation that this person used to be an AML analyst himself or herself, been working in compliance for 5 or 10 years, reviewed so many cases. His or her skillful eye is going to determine that which cases result in closing the account or which cases just result in filing the SAR and increasing the risk. There is no black and white rule for that situation where you need to close the account. There is one aspect of it which is called reputational risk. When your customer is exposing the bank to reputational risk, you're going to file a SAR and close the account. But other than that, there is no black and white. You have to determine yourself that in which cases you have to file a SAR plus opt for the option number 2, close the account or close the whole relationship. Determine on the gravity of the situation, how someone is doing money laundering.
Okay, thank you.
Experience coming to.
One more thing.
Yeah.
So regarding the GoAML tool, so this will be a paid tool which the banks have to, or the obliged entities have to buy.
No.
If in case they want to use.
No, totally opposite. Totally opposite. Your GoAML is funds are paid by the government FIU and have it available for you to use it free of cost to report them, regulatory reporting. You're going to buy the one which generates the alert for you, the software, the tool that generates alerts or hits, sanctions hits or suspicious transaction alerts or cases that you want to pay for. That's called regulatory technology. GoAML is supervisory technology. You do not have to pay for that.
But it is not mandatory to be used by every obliged entity.
It is. If your FIU have made it available, they're going to say that we are not going to receive SAR manually anymore, file the SAR automatically. That's why they show that how you can make an account as an individual or as an organization. Organization as an obliged entities will be making. Individual as a lawyer, accountant, you're going to be making an account to report your clients there.
Okay. Thank you.
A question on chat, is this SAR chargeable? Chargeable? Brother, what do you mean by chargeable? Rahul, unmute yourself, brother.
So when we are filing a SAR report, so each SAR report, do we have to pay
No, brother. No, brother, you're not paying. No, you're not paying for that. If you start paying that, that would mean that you're discouraging AML analysts to file a SAR because you want to say that your bank is going to say that every time we file a SAR, we have to pay for it or something. That's discouraging. The governments are making sure that obliged entities files lots of SAR. This will result in stopping people from using cash to buy expensive things. So we are making sure they use our financial system to buy expensive things, and they're going to use our financial system. We will identify it right away. We're going to report them to FIU. FIU is going to report it to LEA. LEA is going to work with the public prosecutor to prosecute in a court of law. There's no amount being used when you're filing the SAR. It's free of cost. The GoAML is free of cost as well when you're filing it automatically.
Thank you, got it.
Okay, next one. Prava, is a financial institution required to file a SAR basically sold on the now this is not on a negative news. You can file it in 7 different situations. This is called triggers that we're going to discuss in session number 4, which is discussed in chapter number 4 actually. I'm going to discuss in training session number 4, where we're discussing triggers, regulatory recommendation, negative media, adverse media, or whistleblowing, or branch negative referrals, law enforcement agency subpoena and search warrant or national security letters and all those things. You're gonna find out next Sunday. Okay, next one. Which is a better metric in the AML industry? Highest filing of that's actually conversion. It's not we. If you want to ask really good question, I'm gonna give you a really good response. That's a good question. That person is asking conversion. What's the metric? Conversion rate is percentage of it is identified. This is what your performance is reviewed by the board of directors. The performance review of compliance department. Board of directors asked that how many alerts were generated and how many of them were converted into filing the SAR. What is the conversion rate? You're going to say that in year 2021, we generated 150,000 alerts in our bank on suspicious activities, and we filed how many? 1,900 SARs. And okay, let's make it. Okay, and this is the conversion rate. Yeah, and in year 2022, we generated 175 because we implemented a new tool, and we filed 1950 SARs because these two combined together. So they're gonna convert. How much is being converted from here to there. This thing and this thing, the conversion percentage. Let's not round it off. Okay, this is this. So as per the conversion, this is the more important factor than you filing number of SARs. Your compliance officer is going to say that, I filed more than previous year's target or something, but the board of directors are actually looking for the conversion. They're going to say that our compliance department have digressed. Their performance have gone down because the previous year's conversion rate was 1.2%. Means that 1,900 SARs were filed on 1,500 alerts that were generated. More alerts have been generated, but it's not matches with the number of SARs that you're filing is 1.1%. This is the actual performance, the true conversion rate that the board of directors are looking for. And board of directors, for those who have the experience in banking industry, they're not the owners of the bank. They are the ones that are hired by the actual owners, and they are supposed to review the performance of different departments. One of the performance of the compliance department is reviewed through this way. How many were converted, and they also check how many alerts are backlog, how many of them are pending that are not reviewed so far. Or if you want to go into detail, they're going to also check that how many alerts were generated, how many of them were converted into RFI, and then how many SARs were filed and how many of there were conversion and so on. They also check it against how many headcounts that you have. AML Analyst, how many of them are reviewing each alert, how many of them are filing the SAR and so on. And they also check the SAR filing at per different units as well. How many sanction screening unit have identified SARs, TBML, how many sanctions and so on, so that they can review each unit performance in a different way, and how AML analysts are performing in a different way and so on. That and this determines how much budget you need next year. If you're gonna chief compliance officer is able to convince that I need more budget because you're seeing that I have so much backlog and it's of the alerts that can't be reviewed. So please give me more budget so that I can hire more people. So the backlog is cleared, and next year targets more SARs can be filed, and we have a much better conversion rate and so on. This is a report is made by the chief compliance officer and discussed with the board of directors in the annual meeting with them of the each department performance. Okay, next one is when account is closed, what happens to the fund? I mentioned that in a few minutes ago that money order, pay order is basically issued. It's for you to go and take your funds to another bank. We are not entertaining your funds or interested in business with you. Yeah, Mrinal, please go ahead. Mrinal Kapoor.
Yeah, hi Osama.
Hello.
So the reports that we are talking about, these alerts, aren't these like they're also called IMLSR, right? Like until the IMLSR report is converted into SAR, they are called IMLSR, right?
Are you saying the word AML SAR? Anti-money laundering SAR?
IMLSR, internal money laundering suspicious report.
And then that's different. What you're referring to, internal SAR that are recommended by the branches. The SARs that are recommended by other departments, they're called negative referrals. So if someone in the branch saying that our customer have behaved in a certain way or transacted in a different way, we are recommending you SAR that is investigated by the compliance department, and then compliance department eventually deciding to file a SAR on that particular case. It's called recommended SAR or negative referral. As per ACAMS, they use the word negative referral, and that can be from branches where you have opened an account or any other department who are referring to their clients or customers that needs to be reviewed and investigated. Only compliance department can investigate them, and a compliance department are the ones only who's going to decide independently that we should be filing the SAR. No one can influence compliance department or force them to file the SAR or not to file the SAR. Independent decision making.
Okay, thank you.
Independent decision making of filing SAR. No, it means that no involvement of board of directors. Board of directors are not involved. That would be the conflict of interest if they are involved in forcing you to not to file it or to file it. If your bank is doing it by involving board of directors on what cases to file the SAR, that means that there's a conflict. The board of directors are materialistic people and they are interested in profits of your bank. If they feel that they are going to lose the deposit or the profit against a particular customer, they're not going to have you file the SAR. We are, as a compliance department, we are supposed to remain independent, not caring about the bank's profits and so on. We just consume more profits. We are not concerned about making more profits for the bank. Our job is to manage the risk with the help of IT department, HR department, and Q as a supporting department to manage the risk of the bank. And this is how we manage the risk. This was the summary. We're going to sometime come back to this thing that what we discuss in a future training session to remind you that what we discuss, or to to link different topics together in future. So kindly revise these training sessions. Starting from the basic thing, this is a very simple thing that we have discussed. If you find these things to be very complicated, you have to watch the training session multiple times so that you are up to date with everyone. In the next training session, we're discussing something else, and then we're going to discuss investigation. These are the 3 training sessions that are very basic ones that build your knowledge. We're going to use this knowledge to discuss complicated things in future. Okay, before we close, anyone have any questions? Okay, thank you so much. Start doing your listening and reading. This is your job to make sure that you find these questions to be easy. You're going to find these questions to be Jyoti, please.
Yes, I just want to clarify my understanding on GoAML. So it will depend on FIU, whether the FIU wants the automatic SAR or not.
Yeah.
And accordingly, the obliged entities will use GoAML or not.
Yes.
Yeah.
Generally, your federal government is going to force the FIU to buy this tool from the United Nations. And who federal government is going to be forced by? Financial Action Task Force is going to force your government to buy this tool. It's going to force the federal government is going to then force your FIU to buy this tool, and then FIU is going to force the obliged entities to start using this tool when they're filing the SAR. That's the whole thing. Obliged entities.
Okay, thank you.
Entities. Okay. So you please start doing this thing. This is your job, listening and reading. Start doing that. Doing this thing, except this one, we haven't shared this thing, and watch the training sessions that are recorded. Links are being shared with you. Watch the recording multiple times during the week so that when we discuss in the next few training sessions, I'm not repeating myself that I've already covered. So you remember all those things. We discuss new things. This pisses me off that I have to repeat same things that I've already covered. I want to discuss new things with you so that you get a better worth of your money that you pay for, rather than be discussing the same thing over and over again. Okay, see you next week. Have a good day. Take care.